saying that can't happen. So I will be curious to see how this works out. I'd also like to know how they're going to enforce this very limited but still important ceasefire. Don't forget, Russia has destroyed 70% of Ukraine's electricity production during this war. How are they going to monitor this, and then what comes after it?
But Angela, does it seem like to you that it is indeed the beginning of the end of this war?
It may be. I think it's certainly the beginning of the U.S. and Russia reestablishing relations, and we've heard that from President Trump. Is it the beginning of the end of this war? I think the jury's out on that. I think we have to see how long Putin drags out the negotiations before he agrees to a total ceasefire. And again, he hasn't really shown that he's interested in ending this war anytime soon. He's much more interested in restoring these relations with the U.S. and ending his isolation.
That's interesting. The other thing I wonder, Angela, and something that we've talked about with you before, I mean, are there ever really any guarantees that President Putin won't try to invade Ukraine or another country again? And how does the outcome of this negotiation for an end to the war kind of determine the likelihood of that happening again?
So as President Zelensky, unfortunately for him, pointed out in the Oval Office when he then got the vice president very angry with him, Russia has violated every ceasefire it's signed with Ukraine, certainly since the annexation of Crimea in 2014. And Russia has also violated every treaty it's signed with Ukraine since its independence. So I think one has to be very skeptical. And this is, of course, why President Zelensky, again, unfortunately for him, in the Oval Office, wanted to talk about security guarantees. Because without very robust security guarantees, there's absolutely no reason to believe that Russia wouldn't try and invade Ukraine again. The best security guarantee we know would be Ukraine joining NATO. That's being taken off the cards now by the Trump administration. But it needs these guarantees. And the Europeans, the French, the British, and other European countries have said they're willing to provide security guarantees, boots on the ground to be a stabilization force once the war ends. But they say they need American backup for this. And that's something which the Trump administration has not committed itself to.
Angela, let's say this is the beginning of the end of the war, and it does end. What does Russia look like on the other side of this? Is it stronger or weaker than it was? Is Putin more emboldened than he was pre-invasion?
Yeah, so what it looks like is, I mean, the economy is not in good shape, and it's going to get worse the longer this war goes on for Putin. So if the war ends, that would, and obviously if the sanctions are removed, which they would be if the war ends at some point, then that would be very beneficial for Putin. But yes, he comes out of this looking stronger. He invaded another country unprovoked. And presumably, I mean, we have to see if Ukraine has to make territorial concessions to Russia, he will then, have taken 20% of Ukraine. And unless there are these very robust security guarantees, he could invade again. And now he'll be invited back to the United States. Maybe the Europeans won't want to deal with him for any time soon. But Russia's actually strengthened its international position in many ways while it's been fighting this war.
I think about something Tim brought up, and it just reminded us, was it a debate where Mitch Romney said, he was asked, I guess, or the candidates, was it 2008 or before that?
Yes, 2012.
2012. And what was the biggest, what was the biggest concern or national security concern for the United States? He said Russia and was kind of laughed off the stage. But is there some credibility, Angela, in President Trump trying to create some kind of economic cooperation or more economic cooperation between the U.S. and Russia to create a different future and relationship with Russia going forward? And is there some good to that?
Well, in the 1990s, there were a lot of American firms that were very active in Russia, energy companies, large firms, small firms. They were making money, and they were doing quite well. And yet the political relationship between the US and Russia was very difficult. There were a couple of high points after 9/11 when the US and Russia with Putin, worked together in terms of the beginning of the US campaign in Afghanistan. Also, I should point out that there were thousands of American business people in Ukraine when Russia invaded. That didn't stop Russia from invading. So, of course, there are arguments to build up economic ties with Russia. But I think history shows us, and even the experience of the last 30 years, Putin always likes to separate economics from politics. And you can have a good or a strong economic relationship with Russia, and it doesn't seem to have that much impact on what Russia does politically or militarily, particularly under Putin.
I asked what Russia would look like after this, but what about Ukraine? Because this is a country that 3 years ago, we were talking to you and so many other people thought this war would be over just in a matter of hours, a matter of days, a matter of weeks. But look what Ukraine has been able to do to defend itself. What does Ukraine look like on the other side?
Well, on the good side, Ukraine now has the strongest and largest army in Europe. It's developed very sophisticated technological capabilities. It's been using electronic warfare. It's much more sophisticated in that. On the other hand, of course, its economy has suffered greatly. It's had cities and villages obliterated by the Russians. So it's going to need an enormous amount of economic assistance and investment if it is to recover. It's also lost a large number of soldiers. We don't quite know, but I think for both Ukraine and Russia, it's in the hundreds of thousands. And it also has millions of Ukrainians are now living abroad because of the war. They need to come back and they need to help rebuild the country. So economically, it's in very poor shape, even though other aspects militarily it's better off, but it will still be in a very fragile state at the end of the war.
Angela, I was thinking about this a lot. Like, what is the relationship between President Putin and President Trump? And I know we've talked with you about this before. And what is it? Is Russia a great power? Is it a great economy? You already referenced that it wasn't. Their businesses, their alliances, their leadership. I mean, is it an economic and political model to emulate? I'm asking a little bit facetiously, but I'm trying to understand, why there is this relationship.
Well, it's not an economic model to emulate because it's essentially a hydrocarbon exporter. It doesn't have a very modern economy. I always, when I teach my students, I say, tell me how many products in your home are from China and how many from Russia. Well, you know the answer to that. There are many of them from China, they're none from Russia. So it earns a lot of money by selling hydrocarbons, but it doesn't have really a modern economy. It has a shrinking population. It has a major demographic problem, and it's had that ever since the fall of the Soviet Union and even before then. But militarily, it is a superpower. And that's in history. Russia has always been a great power because of its military, not because of its economy. And so it is, I think the largest nuclear power, the U.S. and Russia, the two nuclear superpowers. The Russians have more warheads than we do. And so in that sense, it's a great power. And because of the hydrocarbons. And of course, its location. It's the largest country in the world, sitting astride Europe and Asia. So it has many strong endowments, but it economically, it really does need to modernize.
Hey, just 30 seconds left, Dr. Sten. It does raise the question, though, how the rest of the world keeps Putin in check, given the strength of its military and given his ambitions. How does that happen?
Well, we know that he has ambitions that go beyond Ukraine, and that's why the Europeans are very worried about it. And now you see France offering, a nuclear umbrella to the rest of Europe. You see some European countries, even Poland, talking about should they acquire nuclear weapons. So this is one of the impacts of this brutal war, is at least countries in Europe reminding themselves that they're still vulnerable to a potential Russian invasion. And some of them are talking about the possibility of a war with Russia within the next 5 years.
Bottom line, 10 seconds. This is a good move. This is some progress.
On the call, yes, it is. I mean, hopefully, if they implement this first ceasefire, of course, it's a good move.
All right. My guess is we're going to be coming back to you a lot more still on this. And we so appreciate that we can. Angela, thank you so much. Dr. Angela Stent, Senior Fellow at the Brookings Institution, a member of the Council on Foreign Relations, and her book, author of Putin's World. Be sure to check it out. Hey, coming up, we're going to get a check on global banking as the CEO of HSBC U.S. gives Bloomberg her first broadcast interview. That's next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. One day ahead of the Fed decision. We have got stocks lower across the board. The Dow, the S&P, NASDAQ, all declining right now, looking at a 62-point loss on the S&P 500 index, down 1.1%. Dow Industrials down 244, decline right now of 0.6%. The NASDAQ Composite Index down 311. For NASDAQ, a drop right now of 1.7%. Heavy selling resuming in Wall Street's largest tech companies. Case in point, NVIDIA. Even as Jensen Huang speaks, we've got NVIDIA shares down now by 2.7%. The 10-year yield, 4.26%, with the 2-year currently yielding 4.02%. Spot gold up $32 the ounce at $3,033. Could see a record close on gold, up by 1.1%. West Texas Intermediate crude down 1%, $66.80 a barrel. And Bitcoin right now down 2.8%, 81,624 on Bitcoin. NASDAQ says it will opening a new regional headquarters in Dallas to serve as a hub for clients in Texas, and is planning additional investments in the state. Again, recapping, stocks lower, S&P down 57, lower now by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stenvik, live here on Bloomberg Business Week. Well, the ADRs of HSBC Holdings are up nearly 19% year to date. This as the bank is undertaking a broad restructuring plan that includes winding down some businesses and slashing management ranks. Let's get more on the company, and for that, our own Sonali Basak is sitting down with the president and CEO for HSBC US in her first ever broadcast interview right now on Bloomberg Radio and Bloomberg TV. Sonali, take it away.
Carol, thank you so very much. I'm standing by, of course, with Lisa Miguel, who is the U.S. CEO of HSBC, as well as the head of banking. And it is your first interview live since taking the role. You started on the first day of January.
Yes.
You've been moving very quickly. And have you been met with the craziest markets? Could you have expected that this is what you'd be walking into?
Well, thank you so much, Sonali. It's an honor to be here. I'm just absolutely thrilled. So, look, this is a fantastic role as CEO for the U.S. It is a really interesting time to be in the U.S. The market volatility is challenging for clients. We're very proud of our global connectivity, our global network, the product depth that we have. But clients are using this now more than ever to help navigate a very difficult environment.
Yeah, speaking to the environment a little more, the unique view you have is HSBC is a big global bank. And for the first time in a long time, you're seeing Europe outperform, you're seeing Asia also outperform, and that American exceptionalism story come under question. What does that look like from your view, and is it sustainable?
Yes, it's a great question. So we're helping our clients navigate the tariffs. Tariffs are nothing new. We have 160 years of experience, 150 years in the United States. So we've navigated tariffs before. I think, and by the way, we're the #1 trade bank in the world. We did $857 billion of trade financing last year. So clients need our insights now more than ever. I think the challenges in the U.S., yes, there's uncertainty, policy uncertainty. By the way, there's still 2 conflicts on in the world. And so leveraging our 50-plus country presence and the expertise that we have and the experience that we have developed over the years, helping clients navigate. You know, I think clients got a great experience through COVID, as much as that sounds. They had the ability to navigate a very difficult time and adjust their supply chains. So some of those learnings are actually coming into handy.
Yeah, what does that look like now with that kind of experience in the world of trade finance? Does this set of tariff pressures coming from the United States and even reciprocally, is it jarring to your clients? Is it something that is stopping activity in a way that is going to be difficult to bring back?
Yeah, it's a great question. I think it is difficult to make long-term strategic decisions today. Now, we're going to know more about the tariffs and what exactly is happening April 2nd. So we're standing by on that. However, trade needs to happen every day, and there are flows that are important to continue to support. I think clients are hesitating a bit on the long-term decisions. However, most of them are fairly diversified in their supply chains, so they can work really well despite the noise. I think the other thing about the U.S. is that, yes, there might be some weakness in the stock market. Yes, GDP might moderate. Yes, there may be inflation. But we're also helping clients do business all around the world. And there are growth corridors in areas where we can support what they need to do.
What are those growth corridors? Because back to the question about U.S. investors looking to put money abroad.
Yes.
How much are they doing so? How much are they coming to you and said, we want to invest our dollars outside of the U.S., tariff or no tariffs?
Yes. So it gets to a bit about the importance of the U.S. as a deep capital market with, investors that have significant capital to put to work globally. So they are looking to us. I would say there are a couple of exciting corridors that we look at. One is probably India. 6.5% GDP growth, 1.5 billion population, this made in India trend. We have a significant presence in India, so our history there, that's been wonderful, the US to India corridor. The other is the Middle East with UAE and Saudi, the Kingdom of Saudi Arabia, where we've been for 130 years. We have 6,000 people. We're 3 times bigger than the next competitor. And then probably Southeast Asia, Vietnam, Indonesia, and Thailand. Again, these are areas where I think we've got 5,000 trade specialists in over 50 countries. So we've got the ability to help clients navigate today.
What about the other way around? How do you talk to your counterparts across HSBC in terms of the interest coming into the United States?
Yes.
Are people putting dollars to work right now on that U.S. exceptionalism story? Or are they holding off the way you see the public market investors doing so now?
Yes. So I am seeing still investment commitment in the United States. And we were just with Governor Kathy Hochul and talking through this last week. So there are new plants, there are commitments. I think the PIF made a significant commitment to the president. So we are still seeing that commitment and the plants and the investments in infrastructure. If you think about the CHIPS Act, the Inflation Reduction Act, the size and scale of the population. What did we do? 29 trillion of GDP last year. It's a quarter of the global GDP. It's a big consumer market. So, the depth, scale, and ability to grow your business in the U.S. is really unparalleled. So we're helping on the inbound side as well as the outbound side. But I also think that, helping clients navigate where should they invest, where should they build, are 2 different things, but we're uniquely qualified to do that.
You're helping clients manage large strategic decisions at a time where HSBC is making massive strategic decisions of its own. Your CEO, Georges El-Hedri, had taken over back in September. You took over just in January of the U.S. division. He said in February that the company is finalizing a review of the investment banking divisions. You've scaled back in a big way in the United States. So what does your business look like today? Where are you not? And where are you going to operate?
It's a great question. First of all, I'm thrilled, that Georges is taking these decisions because when you run a 160-year-old financial institution, you have to be really clear about where you're deploying your resources. So that'll be capital, talent, investments, and you want to invest in technology and AI and continue to grow. So he's taken some very bold decisions. He's aligned our company into, the UK hub, the Hong Kong hub, the corporate and institutional bank, and international wealth and premier banking. That's fantastic. It's simplified, it's agile, it's more client focused. I think we had an opportunity to do that, and he's moving at pace. So here in the U.S., the U.S. contributes significantly, over $5 billion last year, to Asia and the Middle East through trade, payments, FX, and our broader markets business, as well as financing. So we're a $3 trillion bank. We are significant, so we can support clients in financing. That'll be debt capital markets and leverage finance. In the global transaction banking, it'll be, as I said, the payments business where we processed 500 trillion last year. We do 188 trades a second. And then we also have FX, where we're trading in 130 currencies, as well as the trade I referred to. So these are really amazing sort of jewel of the crown type of businesses and the ability to help clients navigate. So in the US, that's what we're going to be focused on, the global transaction banking and the financing. M&A and equities, we were less competitive. So I think, making sure that where we have strengths is where we focus.
How do you explain the commitment that you have to the existing investment banking businesses? Because M&A for a lot of other banks had been kind of the core of the operation, but you're making debt capital markets, it seems, like the core.
And leverage finance. Well, because we have the balance sheet and we have the ability to support clients in our multiple lending products, which is highly correlated to the capital markets. And so allowing them to access the debt capital markets wherever they want to issue is really important. On the leverage finance side as well, our financing, our powerhouse, our ability to help clients grow and build is really unparalleled. So those are our power allies and can help us on the international side to navigate and help clients navigate as they grow the business.
So if you think about the global scale of HSBC and the transformation that the bank is enduring, where do you say the U.S. is in that transformation story?
So the U.S. is on a fantastic path, and we were ahead. I mean, I think we talked about, I packed my bags and I was here in a few days to start. And so we're moving at pace, and I haven't seen an organization move this fast in banking. But the U.S. is, again, you know, the core of the business we have in a market share perspective. If you think about where HSBC is strongest, we're the #1 in market share in every product that we care about. So, you know, payments, trade, FX, debt capital markets, again, so that is amazing. The other thing to think about is that we can bank clients from an innovation banking perspective. We have 100 bankers that are focused on, you know, healthcare and technology and, you know, just venture stage companies, like over 1,000 of them. And, you know, that team that we were able to get from SVB, amazing team run by Dave Sabow, who's based in the United States. As those clients grow and build, we can support them as they expand overseas.
Really an amazing transformation story. Lisa Miguel, U.S. CEO of HSBC, we thank you for sharing the story of the transformation of the bank and, of course, where clients are looking to invest today. Carol.
All right, Janali, thank you so much. All right, let's get to one of the most read stories on the Bloomberg today. This has to do with U.S. Chief Justice John Roberts saying the impeachment of federal judges is, quote, not an appropriate response, end quote, to disagreements with their rulings, issuing an extraordinary statement just hours after President Trump called for the removal of a judge in Washington who tried to pause the deportation of hundreds of alleged Venezuelan gang members. A lot going on here, a lot to unpack. Following all of this is our own Bloomberg legal analyst, June Grosso. She's also host of Bloomberg Law every evening at 6 p.m. Wall Street time on Bloomberg Radio. She joins Tim and me here in studio. All right, June, lay it out to us. It feels like a big deal. How did we get to a point where the Chief Justice made these remarks?
So it started on Saturday, actually, with court hearings on Saturday, because the Trump administration is using this law passed in the 1800s that's only been used 3 times, all the times in war, to say that the Venezuelan gang members are infiltrating the United States. It's a danger to the United States. It's an infiltration, comparing it to like a legal invasion.
Right.
And so some Venezuelans' lawyers went to court and told the judge that the Trump administration was actually sending hundreds of Venezuelans already to El Salvador to be held in prison there, an unusual arrangement. And the judge said, if they're in the air now, turn them back because I want them here. You know, in other words, so in other words, stop what you're doing and turn them back. And the Trump administration didn't do that. And so this has escalated because the judge then called them in yesterday and asked for information. When did the planes take off? First of all, they claimed he had no authority under this law. They said that if the planes were in the air already, that he had no authority over the planes. And they made several different arguments, but they also said the planes were already in the air. So he said, I want the times. They wouldn't give him the times. So he said, I want it in writing tomorrow. So today they submitted at around 12, they submitted this paper where they gave some of the information. They said that when he gave his order at 7:20, his written order, the planes were already in the air. But he gave an oral order before that. So, and this is the chief judge in D.C. He's been on the bench since 2011. He is an experienced judge. So today, Trump came out and he didn't call him by name, but he called him a radical left judge and called for his impeachment. And I think this is the first time that Trump has actually, he said so many things about judges that you don't even want to repeat them. Remember poor Judge Merchan in New York?
Right.
He was subject to months and months of this. But he's never, to my knowledge, called for impeaching a judge. So then the Chief Justice, I think, decided, I have to get out ahead of this. But, you know, a Republican has already filed articles of impeachment against this Judge Boasberg. And actually last month, another Republican filed articles of impeachment against another judge. So this is not what, impeachment is not, this is not for what impeachment is for.
June, is the legal system working here? Because to a certain extent, the members of the Trump administration have not responded to everything that this judge wanted to see. Is the legal system, though, working?
Well, it is working, and that's why the Trump administration, I think, is so much up in arms, because this judge but he's taking it one step at a time. First, he has to find out the facts, what happened. So what I think is going to happen now is, since they haven't given him all the information, they've given him some, there's going to be another hearing, I believe, on Friday, and he's going to call them in and get the information from them. And then he'll take the next step. Are there going to be contempt citations because they haven't obeyed the order? And what's going to happen? I mean, now those Venezuelans are on foreign soil, and the judge himself has said that he has no control over what happens in El Salvador. But just remember, too, and the ACLU brought this up, they say that they're 250 Venezuelan gang members, but they've been wrong before when they've deported people. They've mixed American citizens up. I mean, there could be other people there who are not Venezuelan gang members.
June, there's the law system working, and then there's the U.S. Chief Justice of the United States,
right,
John Roberts, coming out and making a comment that some would say, wait a minute, Mr. President, you can't do this.
Right. And it's so unusual. Now, remember in 2018, when Trump was calling judges Obama judges, and the chief came out and said there are no such thing as Obama judges or Trump judges. But he didn't say that in a statement. As I recall, he said that in a speech that he was making on something else. It was sort of like as an aside. For him to, deliberately write a statement like this says that, you have to stop this. What you do, if you don't like an order, you appeal. That's the way the justice system has always worked. You don't say, for example...
There's a due process, right?
Like the borders are, Tom Homan has said, we don't care what judges say. We're going to keep doing what we're doing. So are they obeying the judge's orders? To some extent. But also there's a lot going on that we don't know, where it seems they're slow walking things, or they're just ignoring certain parts of it. So this is critical for the justice system. And I think the Chief Justice saw that and said, I'm going to try to nip this in the bud right now before it gets any worse. But, meanwhile, you still have people filing articles of impeachment against a judge who's just doing his job.
Exactly. All right, great context on a story that I would assume, again, another story today that we're going to hear a lot more. June, thank you so much. Bloomberg legal analyst June Grosso. She is host of Bloomberg Law. Catch that at 6 p.m. Wall Street time on Bloomberg Radio. All right, let's get back to the markets. We are seeing a fair amount of selling, especially when it comes to some of those big tech names. We're going to talk about them in just a moment, but let's get back to Charlie Pellet with the Bloomberg Business News Flash.
Hi, thank you very much, Carol Messer. Happy Tuesday. Welcome back. We have got the Dow, the S&P, NASDAQ, all trading in the red right now. As you correctly point out, we've got tech helping the sell-off today. Big tech names selling off. Case in point, NVIDIA. Jensen Huang spoke. NVIDIA shares down 2.3%. Tesla, a major decliner today. Tesla down another 4.8%. Right to the numbers. S&P down 56, down 1%. Dow Industrials down 232, a decline of 0.6%. And the NASDAQ Composite Index lower now by 279 points for NASDAQ. That is a slump of 1.6%. The NASDAQ 100 index, full of those big tech names, down 1.5%. The 10-year 4.27%. The 2-year 4.03%. Gold up $34 the ounce at $3,035, up 1.2%. West Texas Intermediate crude down 1%, 66.93 a barrel. And Bitcoin, a major sell-off there. Bitcoin now down 3%, 81,478. Sarepta Therapeutics shares are plunging after the company said a young man treated with its gene therapy died of acute liver failure. The patient had received Adavis, Sarepta's one-time treatment for Duchenne muscular dystrophy. The company said the death marks the first case of fatal liver injury linked to the gene therapy. Right now, Sarepta shares, they are plunging by 25%. Recapping the Dow, the S&P, NASDAQ, all in the red, with the S&P down now by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Carol Masser here at Bloomberg headquarters in New York City. Tim Stenovic out there at our Bloomberg News Bureau in San Francisco. This is Bloomberg Business Week. And one of the things we wanted to talk about is, of course, the upcoming Fed decision tomorrow. We did see the Federal Reserve Bank of Atlanta's GDP now index, suggesting U.S. gross domestic product will retract 1.76%, so a negative 1.76% in the first quarter versus a negative 2.06% in its previous release on March 17th. So you've got that going on. Meantime, U.S. Treasury Secretary Scott Bessent, well, he doesn't seem too worried about U.S. growth. He spoke on Fox Business this morning.
The underlying economy is healthy. There is no reason we have to have a recession. Could we have a pause as we go from this incredible level of government spending, which is just unsustainable?
That, of course, is U.S. Treasury Secretary Scott Bessent earlier today on Fox Business. So let's get into it. The U.S. economy, tomorrow's Fed decision. Back with Tim and me is Dr. Stephen Skanke, Chief Economist Advisor at the Chief Economist at the Wealth Advisor, Keel Point. He's also a former U.S. Treasury and White House National Security Council staff member. He's out there in Washington, D.C. Then right here in our New York studio is Bloomberg Economics U.S. economist Stuart Paul. Hey, Stuart, I want to start with you. The Fed is expected to hold rates steady this week. Is tomorrow's decision really all about the dot plot?
Is mostly about the dot plot, and beyond what we actually get from the median FOMC members' expectations for the path of interest rates, we're also going to get a few clues about what they expect for the economy and what's going to be guiding their interest rate decision. So we're also probably going to see a downward revision of their expectations for 2025 growth, and we're also probably going to see an upward revision of their estimates for core PCE inflation for the year ahead. And between the two of those, the question is what ends up dominating? Is it the cooler growth that'll lead to more rate cuts? Is it the higher inflation that'll keep them on hold? We're expecting the median dot to still show 2 cuts in the year ahead. But if anything, the distribution of dots, we think, will be skewed to fewer cuts this year because of that uptick in inflation expectations.
Steve, is that the focus for you too, the dot plot? Is that what you're focused on as well?
Certainly it is, because it gives us some better understanding of what they're thinking about. That's sort of the first step, and then what Chair Powell says in his press conference. They've had a lot of disparate information in the various Federal Reserve bank branches, and it'll be interesting to see how that gets reflected in the board members' expectations.
Well, and I guess one of the interesting things, too, is, and, let me ask you, Steve, we just know the Treasury Secretary, it's kind of interesting, saying the underlying economy is healthy, no reason that we should have a recession, and yet nobody's really ruling it out, right? Can you ever really rule out a recession?
Certainly not, because while the economy came into this year very strong, and even today with slower than trend growth in retail sales and all of the negative consumer sentiment that has been causing consumers to pull back in their spending, the economy is still robust. The labor market is strong, and yes, there's changes at the margin. But it would take a lot to tip the economy into recession. But at the same time, and I think this is what frightens markets the most, is that the president, his Treasury Secretary, his Commerce Secretary have all said that basically they're okay if the market is down and if we tip into a recession. They're not worried about it because their larger plan is to reset, reboot, rebuild, recalibrate the economy, and they seem to be willing to accept that as a necessary cost if that should happen.
I just gotta say, as you're saying this about, I'm seeing Stuart kind of smile a little bit. Stuart, you're smiling. Why?
Well, because I think that policymakers, even in the White House, they do care about economic outcomes. Of course, they say that there's going to be a bit of an economic realignment, but if we think back to past presidents, we saw George W. Bush inheriting in the first term the bursting of the tech bubble. We saw Obama inheriting the global financial crisis. S&P 500 in the first, let's say, 100 days that they were in office was off at most probably about 15%. There's only so much that sort of self-inflicted pain from policy decisions, policy announcements, tariffs being imposed and then being walked back that the White House can really stomach before they feel some pain. The key difference, of course, would be that was Bush's first term, Obama's first term. They were running for re-election. If Trump is seeing this truly as his last term and not part of some broader MAGA movement, maybe Steve is right. Maybe he's a little bit insulated. I think that policymakers tend to be responsive to public sentiment. I think that they tend to be responsive to voters. And when you only have let's say, for example, 3 seats in the Senate that are going to be up in 2026, I think that, I think that it's probably a closer call than it might sound. They might be more responsive than you're suggesting.
So what are you saying, Stuart? Are you saying that policymakers will continue to be responsive, or they have this insulation because the president is not up for re-election and there aren't that many Senate seats that are coming up either?
I think that they're saying that they're going to be less responsive than they have been historically. I think that there will come a point in time where we do get a little bit less rhetoric out of the White House and a little bit more of a reaction to both the printed data and financial market activity. Carol very wisely noted that the Atlanta Fed's GDP nowcast looks pretty dismal for the first quarter. We don't think that it's going to be quite that bad, but printing, let's say, an annualized pace of 0.5% in the president's first term, the president's first quarter of this term in office, is not going to be something that's easy to brush off from a public sentiment perspective or from a markets perspective.
Steve, you worked in government. You're former U.S. Treasury and White House National Security Council staff member. What do you make of what Stuart is saying with regard to the responsiveness of policymakers?
Well, the story that they're telling right now, and that the president is telling, and his cabinet just sort of marches in step with him, is that there is going to be pain, there is going to be adjustment, and he's willing to take that. I think what's different this time, and I don't disagree with Stuart, that the White House and congressional policymaking offices, elected officials, are sensitive, and they don't want to get hoisted. But I think what's different is that this president sees this as his last opportunity to do some things that will, in his opinion, remake the economy into a better place for the future. And anytime you do that, that's going to cause disruption, and in fact, a lot of it. Now, the other thing that I think we have to be careful about is that they can do a lot of things that reduce confidence, lower industrial production, lower consumer spending, and by the time they decide they've maybe pushed too hard, they probably have already set in motion the process of the economy falling into a recession.
Well, and we know we've heard from the administration officials. It's like, okay, we're going to do this, and then we're going to get the tax cuts, and then it's the reverse of the first time around. I mean, Stuart, he is said to be remaking the economy, but there is pain, and if he gets it wrong, could we see something problematic and maybe a longer-standing recession? Just got about 30 seconds.
We're not expecting so much of a long-standing recession. We're expecting about 1.5% full-year growth for 2025. That's still about half the pace that we saw printed in each of the last 2 years, a bit more than half of that. So not really a long-standing recession, but it's not exactly something that's going to bolster your voting base, and it's not something that you can take into the midterms with a lot of confidence.
Not growth, at least for a little bit, or less growth. Guys, thank you so much. Steve Skanke over at Kill Point, and of course, Bloomberg Economics U.S. economist Stuart Paul. Coming up, we got to talk a little bit about NVIDIA, big speech by Jensen Huang. That's coming up.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Masser, Tim Stenovec, Tim out there on the West Coast in our San Francisco News Bureau. I'm here back at Bloomberg headquarters in New York City. Hey, folks, we are watching shares of NVIDIA. I just want to pull it up on my Bloomberg because I know earlier it was trading lower. It's off its lows. It was down as much as 4%. Right now, shares of NVIDIA just down about 1.7%. Shareholders getting a keynote from Jensen Huang, a keynote speech at the company's GPU Technology Conference, AI conference. And I guess they're hoping for some much-needed optimism and momentum into the stock. Let's get through some of the headlines that we got from NVIDIA and talk about it a little bit with Bloomberg News Managing Editor of Technology and Global Security, Lynn DeWan. She joins us in studio. Lynn, there are a few headlines, and I just want to bring them out to our Bloomberg listeners and viewers. NVIDIA, the CEO says Rubin Ultra is coming in the second half of 2027, says the next chip upgrade is 1 year out, and that is the Vera Rubin. Hopefully I'm saying it right. Says the company transitioning to Blackwell Ultra in the second half. And there was also a headline which when you walked in, you said this is kind of interesting. NVIDIA says integrated silicon photonics chips due in the second half of 2026. So we're looking to next year. What's important? What's of note? What's significant, do you think, for our listeners and viewers?
I mean, I think that we're finally getting to the meat of NVIDIA's business here, right? Like for the past half hour, he's been very focused on the software side of things. He's been emphasizing these partnerships that NVIDIA has struck with the likes of GM and some telecom companies and developing 6G networks. I mean, what is a 6G network? I barely understand what a 5G network is. And so you could see that the stock wasn't holding up super well on these kinds of announcements. Certainly NVIDIA's Jensen Huang isn't the kingmaker that he was a year ago when he held this event and just started dropping names and the stocks were moving up on all of the name drops he had.
Right.
But now, like just in the past literally like 15 minutes, he started but NVIDIA has started talking about all of these updates on the chips, on the Vera Rubin, as you say, the Rubin Ultra. I found the
so these are
integrated
just the next...
These are the next iterations of the chips. I found the integrated silicon photonics chips one really interesting. It seemed like the nerdiest of them, and yet maybe really groundbreaking for AI processing in particular, because that will allow AI to process with chips that are faster, more equipped to handle massive data loads, and that's what AI is.
Kind of where we're going, right?
Massive data loads in order to generate a response. On top of that, energy has been this huge suck from AI, right? Like these data centers are using gigawatts and gigawatts. That's why Sam Altman is out there trying to spur the next renaissance of nuclear reactors in the US. And these integrated silicon photonics chips use less energy, which is like one of the biggest perks of them. So I think it's really interesting that they aren't just, pushing on the software stuff that people see as like the future and what's necessary for the AI boom to be sustained, but they're starting to deliver on the like time frames for these more advanced chips that have really been their bread and butter today.
Does it satisfy investors or perhaps critics who worry or concerned that NVIDIA's best days are behind it?
I mean, one of the concerns, as Tim just mentioned, that NVIDIA, like, have we gotten all the good news? Are the best days behind it?
That's right. And, it's funny you should ask that because our equities team just put out a pretty smart sidebar based off of the share reaction to Jensen Huang's comments, and it's not looking great. I think that if there's anything to interpret from the share reaction, it's the fact that the comments are stoking fears that the AI boom has reached a peak. As opposed to continually booming. I think what we used was fears that it has dramatically cooled. I will just offer a counterpoint in the fact that literally every hyperscaler out there has reaffirmed massive spending, and that our own Bloomberg Intelligence colleagues put out a report on Monday that was like, DeepSeek wasn't a wake-up call that the AI boom is over. DeepSeek is a wake-up call that the AI boom is accelerating into the era of inference. And so I don't know if the market has it right. I mean, I guess time will tell.
Well, are all these companies that bought Blackwell chips, are they going to have to just turn around next year and buy Reuben chips?
Oh, and they
when
will.
They come out?
They'll keep buying. You know, it's not like these chips are going to go to waste. They're going to need chips now. They needed chips yesterday. They're going to need chips into the future. I think like we literally just put a story out in the past like 15 minutes as Jensen Huang was talking about the OpenAI Stargate joint venture.
Right.
It's going to hold up to 400,000 NVIDIA chips. And this is the first data center of 20 data centers that this Stargate joint venture is funding. So I don't think we have to be afraid of chips being wasted.
Can you be really quick, 25 seconds, on Google buying this global security firm Wiz for $32 billion? What do we need to know, just quickly?
The next most obvious question is whether Trump is going to approve it. That's the biggest question mark, and that's why Google is on the hook for like a multi-billion-dollar breakup fee. I guarantee it, is because it's a very uncertain regulatory environment for a deal this big.
It's a deal that makes sense, though, real quickly?
It's a deal that makes a lot of sense for Google if they're trying to go head-to-head with Microsoft in cloud security.
All right, cool stuff. A lot going on, certainly, as we know, in the world of technologies. As always, Linda Wong, thank you so much. Really appreciate it. Bloomberg News Managing Editor of Technology and Global Security, cybersecurity, that is. Hey, for those of you watching on TV, the close is coming your way in just a moment. Tim and I continuing our bi-coastal edition of Bloomberg Business Week. We continue on radio. This is Bloomberg.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. President Trump held what he called a very good and productive phone call with the Russian president today. Ending the war in Ukraine was the main topic. CBS's Ed O'Keefe reports there will be future negotiations.
We'll wait for more details on where exactly these ceasefire talks would commence. What exactly did Russia ask for during the call? What else was discussed? There is some reporting from the Russian news agency TASS that the two presidents agreed to keep in touch. There may be some kind of a prisoner of war swap being prepared between Russia and Ukraine, and that they will keep talking about what part of Ukraine's territory exactly is really up for discussion.
In the Middle East, Israel has resumed airstrikes in Gaza. Israel's defense minister says Hamas must understand the rules of the game have changed. It refused to go along with the Trump ceasefire proposal. At the UN, the Palestinian representative.
Palestinians are being killed indiscriminately, are being denied humanitarian aid indiscriminately, are being maimed and detained indiscriminately.
Charles Kupchan of the Council on Foreign Relations.
I don't think we're at the beginning of a month-long military campaign, i.e. the war has started again. I think what we're seeing is Israel ratcheting up the pressure.
Supreme Court Justice John Roberts put out an unusual statement today rejecting calls for impeaching federal judges. Legal analyst Laurie Levinson says it's a rare display of conflict between the executive and judiciary branches.
Trump's postings on social media did send the message that the executive branch and Trump don't want to follow the orders of the court, and that they will try extreme measures like impeachment to get rid of federal judges.
A federal judge in Maryland has ordered the reinstatement of some federal education grants that were canceled by the Trump administration as part of its crackdown on diversity programs. Stranded astronauts are just hours from returning home. Peter King reports.
Their flight started last June 5th with much hope for Boeing's new spacecraft.
Let's put some fire in this rocket.
Problems with the Starliner's thruster rockets pushed NASA to have Butch Wilmore and Sonny Williams stay aboard the space station until they could return on the more proven SpaceX Dragon. The trip home with two crewmates started early this morning.
And undocking confirmed.
Splashdown is expected just before 6 Eastern time in the Gulf, about 70 miles south of Tallahassee. Peter King of CBS News Orlando.
On Wall Street at this hour, the Dow Jones Industrials are down 275 points. This is CBS News. Some real heroes emerged during last week's wildfires in Oklahoma. Michael Wallace reports.
Mechanic Jess Monroe had just lost his house to the flames when he saw on social media a volunteer fire department's truck in nearby Turleton had broken down. So he went to help.
Figure if we can get this truck up and running, there might be one house left standing in the end.
6 other mechanics, including Eric Knutson, showed up. They got the fire engine running again.
That fire needed every truck that they could get to help at least stop it.
Knutson even took Monroe into his home.
Trying to find a new house, really. Taking it one step at a time.
Michael Wallace, CBS News.
A Louisiana death row inmate is asking for his execution to be halted. It would be Louisiana's first nitrogen gas execution. A 53-year-old death row inmate in Arizona has asked for a decade to be executed. He killed his girlfriend's boyfriend, says he wants to give the victim's family closure. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, we are just under an hour away from the closing bell on this Tuesday. Carol Massar back in our Bloomberg Interactive Broker studio here in New York City, and Tim Stenivek out there on the West Coast, our Bloomberg News Bureau there in San Francisco. Tim, a lot coming out from your world today.
Yeah, there really is. All eyes are on what's happening in San Jose with NVIDIA's GTC. It's called the Super Bowl for NVIDIA. Historically, Carol, it's a day where NVIDIA stock has actually risen. You hear a lot from Jensen Huang, who's still there making announcements. We just talked about some of that with Lynn Duan. But shares of NVIDIA are lower today. Not necessarily as a result of what's going on, but there's pressure on the entire tech sector today.
Yeah, and to be fair, right, it's been struggling for a while here. It's really come off a lot from its recent highs. So we're going to get into that, what we're getting out of that event. Also, we're going to talk fixed income, really important considering the Fed meeting and Fed decision tomorrow. We're going to do that with Thornburg Investments, head of fixed income. Yep, we'll talk sovereign debt, U.S. Treasuries. But Tim, we'll see what he's finding maybe perhaps in the world of corporates.
And let's go to space because that's where 2 NASA astronauts are as they make their way back from being stuck in orbit for 9 months. They're finally headed home, Carol. They're on that SpaceX craft. They're expected to touch down just before 6 p.m. Wall Street time tonight, just south of Tallahassee in Florida.
We'll also get an update out of the White House in terms of that pretty long phone call between President Putin and President Trump. So we'll see if there's any new details around that conversation. And then I love this. Shred happens. What's up with that,
It does,
Tim?
I'm told.
What is that?
Well, self-taught cook and Instagram influencer Arash Hashemi, he's going to join us. He's got a new cookbook out, plant-based. You might know him from Instagram. He's got more than 4 million followers, but if you look at his follower account on other platforms, it's up to 6 million. So a lot of people follow what this guy's doing. He's going to be in the studio in New York. You think he's going to bring any food, Carol?
I don't know. Fingers crossed, because you're going to, if he does, you're going to be really sorry because you're always hungry around that time. All right, folks, a lot coming up over the next couple of hours. Let's get to the trade because we're bouncing around our lows of the session. We are off our lows, but nonetheless, we're seeing some pressure across the board. Let's head on over to Charlie Pallett.
Thank you very much, Carol Massar. I got you covered on markets. 52 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ 100 index, Russell 2000 index, all trading lower right now. Big tech leading the way down. S&P 500 index lower by 61 right now. 5613 where that index stands. To keep it all in context, down 1.1%. The Dow down 285 now, down 0.7%. The NASDAQ Composite Index down 285, down 1.6%. The NASDAQ 100 Index also down by 1.6%. X, by the way, hitting their lowest since September. The 10-year 4.27%. The 2-year 4.03%. Gold now up $36 the ounce, up 1.2%, $3,036. While West Texas Intermediate crude down 1%, $66.87 a barrel on WTI. Bottom line here, the Dow, the S&P, NASDAQ all in the red. As for the market backdrop, Victoria Fernandez is chief market strategist at Crossmark Global Investments.
We do think we're going to be in this extended period of negativity, of uncertainty. Consumers are going to pull back. You know, could we have this 3 to 5% jump from the pullback we saw last week from Thursday's lows? Yes. But do we think Thursday was the all-time low? I'm not so sure we can say that. You got a lot of elements yet that we haven't seen.
Victoria Fernandez of Crossmark interviewed this morning on surveillance. As I mentioned, big tech lower, NVIDIA. Everybody's watching that stock today, down now by 2.3%. Tesla down 4.7%. Meta Platforms down 3.4%. Apple down 0.9%. And Alphabet down 2.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, the great AI spend is front and center, as you know. This is NVIDIA CEO Jensen Huang delivered a keynote address at the NVIDIA GTC AI conference in San Jose, California. As you just heard from Charlie, NVIDIA shares down about 2.3% today, along with most of big tech. The stock has lost 21% since hitting a high back in early January. We got a lot of headlines coming out. Jensen reportedly still speaking, Carol, but we're getting some news about the company's outlook, what it's developing, some new hardware. NVIDIA says that it's transitioning to Blackwell Ultra in the second half of the year. That next chip upgrade is about 1 year out, Carol, and it's Vera Rubin. So the successor to Blackwell, which has been all the rage right now, is that new one, Vera Rubin, and that's about 1 year out.
Well, listen, you know, it's interesting, right? We've all been focused on this because we definitely have seen investors pull back, you know, amid overall market malaise and certainly a pullback on some of the big tech names. But NVIDIA is so much, you know, connected with the AI spend that we've seen over the last 2.5 years. So we're looking for some confirmation or further confirmation, you know, that indeed this is happening. You know this event, you know Jensen, he tends to be pretty
The idea behind agents, a little bit of this before we went on air, and he was talking about agentic AI, and this is the idea behind agents, those things that you can pay $200 a month to OpenAI for and get ChatGPT's agent to book a flight for you across the country. They can do that now. He says that will become more and more widespread. We're also seeing some other news come out of this event, Carol, that has to do with assisted driving. NVIDIA said that it's going to help General Motors with driver assistance technology and work with the telecom industry on new 6G networks. Jensen announced the initiatives during this keynote. He did say that NVIDIA is working with GM to use AI in next-gen cars, factories, and robots. And that really goes with the idea of physical AI. This notion that, okay, the next big thing after these LLMs, this is after the Anthropics, after the Claudes, after the Llamas, is physical AI. And that's how AI works in a factory, for example, or works out on a street, or yes, in some cases, maybe even in our homes with some sort of humanoid robot. Physical AI is the next big thing.
Well, I love that you went there because I'm looking at a story by Aronian King and Brody Ford, and they're reporting about how NVIDIA is looking to expand AI reign with personal supercomputers. I mean, there's a lot of things that they're looking to kind of show that there's going to be a continued spend, certainly on their chips. And what it is, NVIDIA unveiling plans for personal AI supercomputers that will let developers, researchers, and scientists develop AI models on desktop machines. And so the company introducing that successor to NVIDIA's Blackwell processor called the Blackwell Ultra, that's due in the second half of this year, followed by a more dramatic upgrade, which Tim was talking about, the Vera Rubin, in the later half of 2026. And I will say that he did also talk about kind of the spend that we've seen. NVIDIA says the top 4 hyperscalers bought 1.3 million Hopper chips in 2024. Sounds like a lot. And that the top 4 hyperscalers have bought about 3.6 million Blackwell chips in 2025. So we see the spend is there. I think one of the concerns, Tim, has been how much of their business is concentrated in those hyperscalers and whether or not that makes NVIDIA vulnerable. It doesn't look like it's making it vulnerable, at least not right now.
Well, you heard Lynn Duan, who covers technology. We were just speaking with her in the last hour, and she mentioned this report from Bloomberg Intelligence that came out yesterday. These hyperscalers are projected to spend $371 billion on AI facilities and computing resources in 2025. That amount is set to climb, Carol, to $525 billion by 2032. So it grows at a faster clip than analysts expected before even the success of DeepSeek. It also raises the question about, okay, where's the investment going as the industry moves from this idea of training these models to actually using them? So it's training versus inference. And if you've used ChatGPT, for example, you ask it a certain question, and perhaps what you see is a few seconds, and it says it's inferencing. And what it's doing is it's thinking it's trying to answer that question. That, of course, takes processing power, but it's different types of processing power than it takes to actually train the model.
Yeah, no, this is a really important point. Like, what is the next stage, and then what is needed? The other thing is DeepSeek, and we've seen Alibaba come out with an AI model, and so whether or not there's going to be different iterations that maybe don't require, as you were mentioning, like maybe they don't need as much chips, they don't need as big a spend, and so how does that kind of dramatically potentially rewrite the AI spend model? I don't know. At the same time, I saw a story about Alphabet and Google and healthcare and AI. And so every industry, and certainly the hyperscalers, are looking to work with all different types of industries, right? To continue to think, all right, how can they use AI? How can they monetize it? And how does that kind of keep this story, this narrative, and this spend going?
Well, one thing that I've been thinking a lot about, and we spoke to Gina Martin-Adams about a year ago about this, is this idea of when the beneficiaries of this technology start to shift a little bit. Certainly the hyperscalers and the chip makers have really been the beneficiaries when it comes to this spend. But at what point do we see this technology start to go to other companies in the S&P 500? Certainly there's this element of, becoming more efficient as a result of AI. We hear a lot about customer service. We hear a lot about agents replacing actual human beings, or at least augmenting human beings when it comes to customer service. But are we actually going to see those productivity gains as a result of this technology? Or are we thinking, are we kind of thinking about it the wrong way? Are we thinking about it in terms of like flying cars and, humanoid butlers?
Give me both. No, but I guess we just don't know, right? And that's part of the problem. I mean, this event, and you know this probably better than I do, this GTC AI conference, as you mentioned, and it has been described as the Super Bowl of AI, it's hyper focused on AI and how it can be used or how it is being used. And we know that these stories, like all of a sudden something comes out and it's just a reminder that this industry, this technology can be disrupted, as it has been with DeepSeek to some extent. But you do wonder, I don't know, I'm curious about on the ground, like the euphoria. Is it still there that we've seen over the last 2 years, or is it a little bit more measured? I don't know.
Well, I'm glad you brought that up. If you drive in from the airport here, from San Francisco's airport in the southern part of the city, up to the city, every billboard you see is about AI. Maybe I saw an Airbnb billboard as well, but everything's AI. They're startups, they're huge AI companies, and they're talking about technology. A lot of software as service, a lot of Salesforce AI billboards as well. You certainly do see that everywhere. You don't see that in other parts of the country, Carol. This is so unique to Silicon Valley. I mean, if you think about the advertisements that we see when we're driving to the airport from New York City, it's all hospitals. It's healthcare.
Exactly, right? Like, know your market, or you understand. It is interesting, too. I'm looking at a Wolf Research analyst, Chris Caso, saying in a note previewing the event, AI stocks have been down sharply on recession fears, and while we think AI spending is the last place cloud customers would wish to trim budgets, if the areas that fund those budgets suffer, that could put some pressure on CapEx. So this is like, there's so many questions, that are still out there when it comes to the AI spend, and that would certainly impact NVIDIA. You are watching and listening to Bloomberg Business Week. I'm Carol Massar, along with Tim Stenovic. We continue to track some of those headlines out of the NVIDIA event. Coming up next, though, we're going to get to our weekly look at the world of EVs. Bloomberg Plugged In, we call it. And this week, we talked with the co-founder of ZenD. That's coming up right here on Business Week.
tell Carol I can take it all the way?
We do check markets all day long here at Bloomberg with the Dow, the S&P, and NASDAQ all in the red. The S&P right now down 53, drop there of 1%. We have got the Dow down 215, lower by 0.5%. NASDAQ down 266, a drop there of 1.5%. Equities are slipping, yes, off session lows, but still a down day with mega caps hitting their lowest since September. Right now, we have got the 10-year yielding 4.27%, the 2-year 4.03%, gold up $36 the ounce. Gold surging today on geopolitical tensions, up 1.2%, and West Texas Intermediate crude down 1%, 66.92 a barrel on WTI. Bitcoin, meanwhile, down 2.4%, 81,985 on Bitcoin. Federal Reserve policymakers have begun their two-day meeting, so what to expect in their statement at 2 o'clock tomorrow, Wall Street time. Stephanie Roth is chief economist at Wolf Research.
I think they'll say what they typically say is they're going to respond to the data, and if the data weaken, then of course they're going to respond, but they can't really promise that much more in advance, especially because this is an environment where they're likely to take down the growth numbers tomorrow, but they're likely to take up their inflation numbers. So this is a really difficult environment for them because they're going to have to wait until unemployment rate starts to rise more materially for them to actually be able to cut, as opposed to the idea of them being able to cut because inflation is low.
Stephanie Roth of Wolf Research. Among the day's economic reports, housing starts rose in February by more than forecast after a weather-related plunge led by a pickup in single-family home construction. Among home builder names, KB Home down 0.8%, Toll down 1%, Lennar lower today by 0.4%. Recapping stocks lower, S&P down 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Well, it is time for another edition of Bloomberg Plugged In, your weekly look at EVs. Emily Griffeo and I talked about this yesterday when it was one of the most read stories on the Bloomberg terminal, and it's certainly worth revisiting because BYD shares jumped to a record after the Chinese automaker unveiled a lineup of EVs that it says can charge almost as fast as it takes just to refuel a regular car. Being able to charge a car in the time it takes a combustion engine vehicle to pull in and out of a gas station could be a game changer. It could convince drivers who aren't willing to make lengthy stops to actually go electric. Curious what Michael Stadler thinks about this. He's the CTO and co-founder of Zendy. It makes software that helps design EV infrastructure. He joins us from San Diego. Michael, I want to get your reaction to this BYD news in a second, but I got to tell you, I described your company as making software that helps to design EV infrastructure. Did I get that right? Because I had a heck of a time finding exactly what your company does.
Well, I mean, of course, we do electric vehicles, and thanks for having me. Good afternoon. But we do a little bit more than electric vehicles. We do also microgrids, and I think that's what we are discussing maybe today and how we charge these electric vehicles.
Okay, so you're watching closely the different types of EV charging systems, the different types of batteries. What'd you make of this BYD news? Because, look, here in the U.S., we're not going to be driving these vehicles anytime soon, I assume, unless the president decides to change the way that rules are structured around importing Chinese EVs. But if this is indeed something that can be done, it's a game changer for EVs, no?
No, it's very cool, and I also read it today, and it's very cool to add 250 miles in 5 minutes. But it also creates a challenge for the distribution system and the infrastructure because you have to provide that power. And if you think about that, a lot of these cars are around, then it will be really a huge challenge for the utility system. And I think that's where the problem, where the challenge starts with charging all these electric vehicles in that time.
So, Michael, tell us how your system works. And I'm just curious kind of where you are in this process in terms of acquiring customers, putting it to work. Give us some kind of size and scope.
Yeah. So we are a software company, as you guys said, and engineering company, and we help our clients putting the infrastructure in place which is needed to provide this high power. I mean, the utilities, for example, I mean, they have huge challenges to provide this power. I mean, it can take 7 to 10 years to upgrade the distribution system to provide this power, right? So this is why we help our clients to design, plan, install, and run so-called microgrids, which is basically cogeneration at the place where you charge the electric vehicles.
So who are your customers right now?
Well, I mean, we have a diverse portfolio here. I mean, of course, there are engineering companies installing this infrastructure to provide the power, but there's also, of course, fleet management providers who really want to implement electric vehicle trucks and all this. So yeah, we have multiple clients here, but mostly engineering companies installing microgrids and EV infrastructures.
How has business been, given the challenge that we've seen over the last couple of years, for American companies to sell EVs? The idea that they've gotten a little too expensive for consumers, the demand that a lot of these American companies thought would be there. Look what happened with Ford, look what happened with GM, even Tesla is seeing a sales decline this year. What has your demand been like? Has it held steady, or has it been affected by what customers are doing?
No, actually, it's steady. Yes, of course, there's uncertainty currently in the market, but I mean, almost 30% of all the people shopping around for new cars are still considering electric vehicles, because electric vehicles are fun to drive, they are cheaper. I mean, I'm on my 4th electric vehicle and I would never go back to a gas car, right? So, no, for us, the market is stable and it's actually increasing.
Hey, so give us a little idea. We are Bloomberg, as we always like to throw out there. Give us an idea. I know we've been asking about customers. We are on your website, Walmart, Bloom Energy, Generac. You've got some academic universities, ASU, US San Diego, Georgia Tech. But there's a lot of other companies. It sounds like you guys are doing a lot of research with folks, but give us a little bit more idea of where the business is and the growth that you are seeing, whether it's top line. I'm assuming you're not profitable yet, or is that? And
No, so we are, but the thing is, we are really rooted in research, because what we are offering is a methodology which really helps you to install infrastructure, meaning generators, natural gas generators, batteries, renewables at the place where you charge your electric vehicle, or where you need the power for a microgrid. We call this microgrid, right? And that can be a technical, challenging process, and it needs to be standardized so that you can do this really quickly and at an efficient cost, right? And this is why we still do a lot of research, and we are at the cutting edge of research here also when it comes to new technologies. And this is why we're working with universities, because we don't have only this power problem on the electric vehicle side. I mean, if you think about data centers, right, they also want to get a lot of power now from the utility system, and they're talking about small modular reactors these days. So we have to research all these technologies and bring them in our software platform to provide this to our clients to efficiently plan those microgrids.
Hey, Michael, in terms of infrastructure here, what has this administration meant for your business? Certainly, he's close with Elon Musk, but that hasn't really helped the EV industry. He wants to roll back these tax credits. Does that affect your business?
So far, it hasn't affected us because I think it's. I mean, as I said, electric vehicles are for real and they're not going away, right? And the projects that we're seeing, it take a year, 2 years, or whatever it is. So you're not just canceling them because of the uncertainty that we're seeing right now. So far, we actually have a nice growth in the microgrid space, which is not only the electric vehicle space, and we're actually doing better than last year.
Michael Stadler, gonna have to leave it there. Thanks for joining us. Do appreciate it. CTO and co-founder of Zendy, joining us from San Diego.
All right, Tim, well, the business world continues to move on around some massive geopolitical issues, everything from trade and tariffs to war, and that's where we go now, and to what could be another move to end the war between Ukraine and Russia. It's something we talked about earlier. We talked about President Putin of Russia and President Donald Trump of the United States having a roughly 90-minute phone call earlier today. With the latest on the call and what we are continuing to learn about it is Bloomberg Balance of Power co-host Joe Matthew. He's in our Washington, D.C. bureau. Joe, we know President Putin has committed to limit Russian attacks on Ukrainian energy infrastructure for 30 days, that phone call. But what else are we learning? Because it feels like it's the first step of still a lot to be done.
Yeah, I think that's right, Carol. There's a lot more conversation about what was not included in this readout following their call. We got different versions from Moscow and from the White House, as is typically the case. The Trump administration indeed telling us that this is an energy and infrastructure ceasefire. Of course, that falls short of the full ceasefire that Ukraine had agreed to, that the president was bringing to Vladimir Putin today, a 30-day ceasefire across the board. They said they would work towards a maritime ceasefire and a couple of other stages in this deal. This basically means that Vladimir Putin won't shoot as many missiles at power plants and other infrastructure in Ukraine, but it will do nothing to the Ukrainian military to change rules or terms on the battlefield, as well as Vladimir Putin's ability to bomb civilian neighborhoods, which he has been doing regularly for the last 3 years. So we're trying to parse out what's actually different here, knowing that we were talking about security guarantees, a full ceasefire, and a lot more. Vladimir Putin wants to see U.S. military equipment shipments, military aid stopped. And they've made it clear from Moscow that they're not going to sign off on a full ceasefire until that happens. So we have a bit of a standoff here, Carol. Donald Trump did not agree to do that today.
Well, Joe, if this indeed goes through, how would the U.S. and its allies actually enforce a ceasefire such as this?
Pretty unclear, to be honest with you. I mean, you can obviously tell if Vladimir Putin is targeting power plants, and they've always got their eyes on the Zaporizhzhia plant that we've talked about, that nuclear power plant that has been a real point of concern for the past 3 years. Remember what Donald Trump said last weekend on Air Force One. He made clear that talks were already underway, that a framework was being built, and that what they were talking about at this point of the game, ahead of this call, was dividing up assets, he said, when it comes to land and when it comes to power plants. Here we are with an energy infrastructure ceasefire. There was no word on land, though. What happens to Crimea? What happens to the Donbass? Russia wants all of the land that it's acquired in the last 3 years.
Joe, as you know, we did get a readout of that phone call from the White House. I just want to read it out for everyone and what President Trump and President Putin said. The two leaders agreed that a future with an improved bilateral relationship between the United States and Russia has huge upside. This includes enormous economic deals and geopolitical stability when peace has been achieved. Again, the readout from the White House, it makes me wonder about, what will be the economic relationship between the U.S. and Russia going forward. We've been there before, as Angela Stent reminded us. We've seen U.S. big companies in Russia, but makes me wonder what's next. Got about 40 seconds here.
Yeah, I don't know if we're going to see McDonald's popping up with U.S. ownership at any point soon, Carol. We all remember glasnost and perestroika and a very different world coming out of the Soviet Union. I think this might have more to do with energy and maybe development, even in the Middle East, which is something that they brushed up against in this readout. A lot that we could learn after this phone call today.
Yeah, absolutely. And I know you guys will continue to report it out. Looking forward to it. Joe, thank you so much. Bloomberg Balance of Power co-host Joe Matthew. Catch Joe and Kelly Lyons at 5 p.m. Wall Street time on Bloomberg Television and Bloomberg Radio when they will be back to wrap up the day in Washington and politics. All right, folks, we've got about 26 minutes to go until we wrap up the trading day here on Wall Street. The S&P 500 down about 1 full percentage point. NASDAQ 100 down about 1.5%. Coming up, investors dialing back on U.S. stocks. We drive to the close. Next on Business Week.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got mega caps hitting the lowest since September, with the Dow, the S&P, NASDAQ very much in the red. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are under pressure, but off their lows. The Dow is currently down 250 points. S&P's dropped 63, while the NASDAQ is still down 1.8%. The U.S. 10-year yield is at 4.28%. Gold is climbing. Oil is in the red. And Bitcoin, that's falling by 2.4%. Among the main 11 S&P sectors, only healthcare was in the green. Leaders to the downside, telecom and consumer discretionary. And leaders to the upside in the Dow, Verizon and UNH. Well, NVIDIA fell 3% and led to the downside. In deal news, Google is buying cloud security firm Wiz for $32 billion. And in the biotech space, Sarepta plunged 25% on a report of a patient death after using their gene therapy drug. In other news, Haleon holder Pfizer offered 662 million shares. And wrapping things up, Royal Caribbean fell 6% among weakness in the cruise operators. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUA, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. We've got just about 18 minutes to go until we see the closing bell. Hear the closing bell on Wall Street. Busy little Tuesday. Charlie and Bill Maloney just breaking down the trade here, but we are off our lows of the session, but still down about 1.6% on the NASDAQ 100 and down about 1% on the S&P. Tim, one of the stories that was really interesting to me reading in is what investors were up to, slashing holdings of U.S. equities by the most on record. That was according to BofA's latest survey, underscoring the massive rotation that's underway in global markets. So we saw fund managers reported being about 23% underweight in U.S. stocks. And Tim, I think that was a plunge of about 40 percentage points from the previous survey.
Wow, it's a dramatic shift, and it shows just how quickly traders have ditched their optimism about American markets, with the S&P 500 tumbling just about 8% from an all-time high back in February. Let's see what our drive to the close guest has to say about this. We've got Scott Ladner with us, CIO at the RIA Horizon Investments. They've got about $10 billion in AUM, joining us this afternoon. Hey, Scott, good to have you on the program. I'm curious what you make of this Bank of America survey. Is this a sign that it could be kind of contrarian, that it's a time to buy, that so many investors have slashed their holdings?
Well, Tim, yeah, I think actually that there is some truth in that. I mean, the slashing of the holdings in the U.S. makes a little bit of sense, though. Look, Trump, if Trump has done one thing, he has basically bullied / scared both Europe and China into actions that they probably wouldn't otherwise have taken. So, with respect to Europe, getting off the debt brake and basically starting to spend money from a fiscal standpoint for the first time since really 2012, it can be game changing for the revenue for some of those companies. And then when you pivot over to China, and they're clearly worried about what Trump's tariff policy, trade policy is going to do to their already somewhat weak economy, and you've seen Xi pivot off of common prosperity, and so these two moves, which were really holding down the equity values in both China and Europe, Trump has kind of bullied them into changing those things, and that's actually to the benefit of equity markets in those two geographies, which are almost uninvestable for much of the last decade.
Yeah, I mean, the S&P 500 outperformance of the rest of the world has just been remarkable. But what does that do to U.S. investors that buy U.S. companies here? If we're seeing outperformance outside of the U.S., is that going to continue, given what we've heard from the White House and what we've heard from advisors, that essentially they're not necessarily paying attention to the markets right now, and that with time they will recover?
So I think actually it makes the case for U.S. equities more compelling, but not probably for another quarter or two. So this is a time when frankly in the last 5 years diversification has been nothing but punished. So you've done anything other than invest in the Mag 7 or the top of the U.S. market, and you're benchmarked at really anything, you've gotten creamed. And so, Ben, you've been punished by diversifying. The last few months, and probably for the next couple quarters, we think you're actually going to be benefited from diversification. And so, this is a time when we're going to see some pretty good buying opportunities for U.S. stocks. I mean, we're getting some of these things at a bigger deal than we would have otherwise had because folks are rotating out of U.S. and into these other markets. We think that's probably more of a trade, but maybe a trade that's going to go on for a quarter or two, not for a year or two.
So you don't think, okay, so you still think U.S. will ultimately outperform by the end of the year versus European markets, or not necessarily?
Not necessarily for the end of 2025, right? I mean, Europe and China have pretty big leads right now. So in terms of making up those leads, don't know if we get there. But as we kind of enter into 2026, when some of these fairly challenging things that Trump's doing right now with respect to the sort of the ideological shifts, those might actually have a chance to start paying some dividends on the deregulatory front or the taxes front or some of these other things by the time we turn the calendar into next year. So, I think there probably are some opportunities, but I'm not sure if the U.S. is going to catch them this year.
Are you worried at all about a recession? And do you buy the argument that we get from the administration that, all right, guys, it's going to be a little tough. We could have some economic pain, maybe a recession, maybe not. Nobody seems to want to kind of throw their hat into that ring definitively, it seems. But do you buy that idea that tariffs now, tax cuts later, and maybe regulatory moves, and that will be an engine for economic growth?
Yeah, I do buy that. And now we are clearly experiencing somewhat a growth slowdown because everybody's just, we're kind of entering a
and an M&A slowdown. Like I'm seeing a lot of stories where companies are like, nope, it's we thought we'd be doing a lot of deals, and we're not.
Well, look, if you can't plan, you can't invest. If you can't plan, you can't act. And nobody can plan in an environment in which we don't really understand what the operating principles are going to be for this administration. We have some clues. We have some direction. We don't know sort of the direction of these things, but we know nobody knows anything about specifics of how how we're going to prosecute some of these policies. And so that's until we get some of that detail, and we will get it. I mean, it's not we're never going to have it. Like we will get it at some point, but until we get it, it's just a really tough operating environment, whether you're a consumer, an investor, or a business owner.
Well, okay, so what do you do then in terms of for investors? Do you put new money into equities? We've talked about equities, being cut back. Would you put new money into U.S. stocks, to overseas stocks, or would you play the fixed income world?
Definitely not play the fixed income world. So we think yields are probably about in the right place right now.
You do, yeah.
And so the yield drop, it makes sense in the context of tariffs, which everybody thinks tariffs are inflationary. Tariffs are deflationary.
Yes and no. I would argue with you because if you are putting tariffs on products that come in, that obviously raises their costs unless somebody eats them. But it also gives an opportunity for domestic producers to say, well, if those prices are higher, I can raise my prices. There is some of that argument as well.
There absolutely is. You're right, Carol. But I would just argue that tariffs at the end of the day are still a tax. And taxes are growth retardant, and growth retardant things tend to be deflationary over time. So it's not a 2025 deflation story. Like that's not what I'm trying to say. But as far as going forward, if we're looking at a 10-year yield, 10-year yield is going to care a lot more about.
You think tariffs are a good idea?
I think if you can no.
Okay.
Simply no. But there's a caveat to that though, which is important. I don't think that people in the market are pricing this. It's the state of the world. So here, let me give you a state of the world, which I think could exist.
And just got about 45 seconds.
So the state of the world that could exist that would be interesting would be if the reciprocal idea kind of takes hold and other countries actually lower tariffs on the U.S.
Right.
You might end up in a regime where you have lower global tariffs overall. That would be a pretty big boost to global growth that I don't think is in the market right now. But I'm not saying that's necessarily the base case, but that is a state of the world that is possible if under the sort of reciprocal tariff agreement where hey, we just want everybody to pay sort of the same rate.
All right, we will certainly see. Makes for an interesting investing year, no doubt about it. Got to leave it there, but thank you so much. Really appreciate it. Scott Ladner, he's Chief Investment Officer of Horizon Investments. As we mentioned, they've got about $10 billion in assets under management, joining us right here in our Bloomberg Interactive Broker studio. Quick check on the trade, and folks, we're just coming up on about 10 minutes left in today's trading session. And Tim, we're still seeing some pressure on U.S. stocks.
Yeah, going to WEI on the Bloomberg terminal, down 1.2% on the S&P 500. The NASDAQ down 1.9% today, so big tech getting beat up. The Dow down about 0.7%. We'll see how NVIDIA does into the close. Right now, though, Carol, it is one of my decliners.
No surprise. There's a lot of them lower, those big tech names. All right, folks, I'm Carol Massar along with Tim Stanovic. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody. In just under 7 minutes, Tim and I heading over to our TV colleagues. We're going to count you down to the close on this Tuesday, March 18th. As Tim just mentioned, we will be talking about some of the winners and losers of the session, or decliners and gainers. I guess we can't say winners and losers. But anyway, we're going to get to it and any news after the closing bell. So we'll get to that in just a moment. In the meantime, Tim, one of the most read stories has to do with Elon Musk. I didn't do that very well.
It always has to do with Elon Musk, right? When it's one of the most read stories.
Yeah, it really does.
Isn't that how it works? Check this out. I will say, when this crossed, I had to click. Elon Musk has invested $150 million to acquire more shares in X last year at a valuation approaching the price he paid for the company's equity back in 2022. He is the majority shareholder of the company. He's also expressed a willingness to buy more minority stakes at the same valuation. This is according to the annual report from Kingdom Holding Company. The Saudi investment firm has been a shareholder of X since 2011, when it was still known as Twitter.
Yeah, the report didn't reference Musk or X by name, but a person with knowledge of the investment who asked not to be named discussing private information confirmed the report was referring to X specifically. The Kingdom stated that the majority shareholder of, quote, a privately held social media services company, end quote, recently invested at a transaction price equal to the carrying value of the investment on the Kingdom's balance sheet. So as of December 31st, the firm valued his investment in X at 985 million reals that's about almost $263 million US, implying a net valuation for all of X of about $29.2 billion, which is close to what Elon Musk and other investors paid for Twitter's equity back in October of 2022. The company also held about $13 billion in debt. What did he pay for the company? 40? Was it?
Oh gosh, I don't even remember. Was it I don't even remember what he paid for it. $44 billion.
That sounds about right.
Okay, don't quote me on that. That's just kind of.
I'm checking it out. $44 billion,
Okay,
October of 2022. Yeah.
How much was it?
$44 billion. Well done.
All right.
Yeah.
Sometimes I get things right. All right. Speaking of billions, he is still the world's wealthiest person, despite the decline in Tesla stock that we've seen this year. He's worth about $312 billion. Since October of 2023, he's owned almost 74% of X. This is according to an ownership chart submitted to state regulators in Nebraska, of all places. The transaction last year, though, hasn't been previously reported. Kingdom is among X's largest minority shareholders, along with its founder, Prince Alweed bin Talal Al Saud.
Yeah, I mean, listen, we know the story of X. We've all talked about it. I mean, we've all been frequent users of it, especially when it was Twitter. It became, I think it's safe to say, a bit of a different company under the private ownership of Elon Musk.
I think that's fair to say.
Right? I think so, too.
Does your X look different? Like, do you see different content now? I see much different content.
You know, I was like going through it yesterday, and I just kept like deleting ads and like, or like saying I don't want this content and stuff. And I'm like, why am I doing this?
Good luck.
And exactly. Listen, a lot of advertisers have fled the service. We know that, or paused their spending. That was shortly after his takeover for fear that their sponsored messages may appear alongside inappropriate content. Fidelity Investments has marked down X's value by 68% as of January. So we'll see what happens, going forward. It's still something we talk about. It is still something that a lot of people post on, but it's, as we say, safe to say, a different entity now that it's privately held with.
There's also some competitors too. There's Blue Sky that it seems like people are using.
Are you on that?
I'm not on Blue Sky.
Okay, me neither.
But it seems like a lot of journalists are on Blue Sky.
Yeah.
And then there's Threads. I have Threads just because of that's the Instagram/Meta platform's Facebook-owned version of Twitter.
Yeah.
But that one's a little different too. So there's no like old school Twitter anymore. Those days are gone. Hey, speaking of Elon Musk, this year he's lost $120 billion. That's how much his wealth has declined.
That's real money. Is he still the world's richest? He is, isn't he?
Oh, yeah, $311.9 billion. It's about almost $100 billion more than Bezos, who clocks in at $216.8 billion. This is Rich Go on the Bloomberg.
So he could lose another $99 billion and he'd still be the richest person.
Yep.
What's a few billion among friends?
That's a good problem to have.
All right, folks, we are going to head over to our TV colleagues. Just got a few minutes to go until we wrap up the trading day on this Tuesday. Let's get to it. Beyond the Bell, starting right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, Alex Steele and Scarlett Fu here to take you through the Closing Bell in a global simulcast. We're joined now by Carol Massar and Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the day. Carol, I swear we did have rallies when you were gone. You wouldn't know it, though, by looking at the market today.
What are you saying? I came back and, I dragged down the market? No, it's kind of wild because I'm looking at what the Mag 7, all of them are down about 2.5%. So it really does feel like some malaise back in the market. But I will believe you that there were rallies.
Yeah, we had, well, even though the Mag 7 kind of sat out yesterday's rally. So that's what was pretty remarkable. It was a pretty broad-based rally yesterday, but we saw some of the mega cap tech names not actually take part.
Not actually take part, and in fact, you have Meta now losing ground as well. So all the Mag 7 names are negative for 2025. I guess it wasn't that surprising in the end when Bank of America said that in its latest survey, investors have cut their holdings of U.S. stocks by the most on record. A big sea change.
Yeah, exactly. And the question is, does that continue, right? And what else does it entail? Does that mean we're going to sell treasuries? Are we also going to sell U.S. credit? Does that actually go elsewhere in the European market?
I'm going to head to Europe. That's exactly what I was going to say.
Are they going to like you there? I don't think they're going to like us anymore. I don't know if they like us very much.
This is a deep tease, but there's a new Air France cabin that you can fly, Carol. We're going to talk about that in a little bit.
We are going to talk about
Oh, okay. Well, I like that. That sounds nice and fancy. But you're taking a look here we're right near the closing bells here. S&P seems to be trading near the lows of the session, guys. The S&P around 1% lower. The NASDAQ off by 1.7%. So a little bit of steam to the downside as we head into the close. The Dow Jones Industrial Average off 0.6%. But I've been saying this all day, guys. It's really been tech-driven because you take a look at the equal-weighted index, for example. You take a look at small caps. Yes, they're still lower, but nowhere near what we're seeing within the tech sector. You have the equal-weighted index just off by 0.5%.
Yeah, really interesting in terms of perspective and context of what's really going on internally within the music and within the markets music. What am I hearing? Hey, the S&P 500, Scarlett, you do have, though, a majority of names lower in today's session, 338, losing some ground on this Tuesday. 161, though, did actually show up with some gains here.
Yeah, and take a look at the IMAP because there are two sectors that are in the green. Energy up about 0.25% and healthcare gaining 0.1%. But as you mentioned, tech is really the laggard here, and whether it's communication services, which includes the internet service providers along with Alphabet, consumer discretionary, which includes Tesla, or tech overall, which has NVIDIA, those groups are all down at least 1.5%.
All right, guys, let's get to some of the individual gainers. Atop my list is Intel, which is among your top gainers in both the S&P and the NASDAQ 100, or at least was earlier in the session. A gain of earlier in the day, about 2.8%, finishing the day with about a 1% gain. Stock really rallied nearly 7% yesterday. It's been up 5 sessions in a row, so it's up just around 30% over that time period. Our team noting that ahead of today, taking on his new role as CEO, Liputan sent a letter to employees warning that it won't be easy for the company to hold off the forces that have set it into decline. Yesterday's Reuters saying that the CEO potentially plans to cut back on middle management. So we're keeping an eye on this one, but definitely a little bit higher in today's session. BYD, had to mention, at its highs up about 3.3%, closing with a gain of 2.6%. The ADRs in the United States, the Chinese automaker unveiled a lineup of electric vehicles that it says can charge almost as fast as it takes to refuel a regular car. So that's pretty impressive. And then Lucid Group, I know it's just about a $2 stock here, but still up almost 9%, up almost 16%, or more than 16% intraday. So really rallied earlier, but up about 9% here at the close. The EV maker upgraded to equal weight from underweight over at Morgan Stanley, which says it sees potential for the stock to re-rate with new leadership that can put forward an executable AI strategy through partnerships. So some analyst lingo there. Price target, though, unchanged at $3. Keep in mind, it's down about 19% year to date and down about 96% from its high back in February of 2021. And it's got a high short position as well.
Okay, you got the gainers, Carol. I was watching the decliners today, starting with NVIDIA down 3.4% today. This as Jensen Huang spoke at the company's GTC conference, which he referred to as the Super Bowl of AI. We got a lot of news today. NVIDIA unveiled plans for more powerful chips, an AI model for robotics, and personal AI supercomputers. And this event is just getting started. We watch this event closely for a few reasons, because we learn a lot about what NVIDIA's plans are for this year and next year, but also because it tends to move the company's stock. It's a different movement today, though, than what we saw over the past 2 years when GTC has gone on. The stock gained 0.7% on the first day in both 2024 and 2023. Gains extended to 4% and 5% respectively by the time the conference concluded later in the week. So stay tuned. We'll see what happens later in this week at NVIDIA GTC.
That was a very impressive summary of everything that happened in NVIDIA, because Alex and I were looking at the headlines earlier, and a lot of it was just like tech jargon that we totally didn't understand. There's something with Newton. There's a lot of complicated jargon in there.
There were words.
You're in good company. Lynn Duan came on our program during the 2 o'clock hour, and she was like, I don't even know what this means. So
good. Okay, great.
You're in good company. All you need to know is it's about physical AI. So we're going to have these robotic butlers.
Thank you.
Soon
Okay,
doing
physical
all our work
AI.
for us. That's what I need. Hey, I think Scarlett, you mentioned, was it Scarlett or Alex who mentioned Meta Platforms today falling into negative territory for the year, down 3.7% on the day. It's become the last of the so-called Mag 7 stocks to go negative for the year, down 0.5% on the year so far. It's interesting because we saw earlier this year that record rally for Meta Platforms, unprecedented 20 straight sessions of gains. The stock climbed nearly 26% so far this year, but it's since erased all of those gains. And finally, Abbott Labs fell by 1% today. It makes Similac infant formula. It was down over 2%, but it bounced off its lows a little later in the session. This is, we learned that HHS Secretary Robert F. Kennedy Jr. is planning to meet with execs of U.S. infant formula companies to discuss nutritional standards and supply chain issues. So we'll watch that one as well.
All right, got to be honest, guys, nothing happened in the bond market. There was a 20-year auction. It was solid, $13 billion. It was 20-year. Does anyone really care? Kind of going nowhere. Not a lot of volatility, not a lot of movement, which was surprising and interesting considering the sell-off that we saw in tech, but definitely a wait and see when it comes for the Fed tomorrow.
Yeah, exactly. It's like we're just kind of waiting, right, for that Fed decision or lack thereof, but at least what we get in terms of outlook. Hey, guys, in terms of what caught our attention, there is a redesign. Tim talked about this. First-class cabin called Le Premier. It's from Air France.
Le Premier, of course.
I know, of course, right? It's supposed to be like a private jet-like experience. 3.5 square meters of private space, a full-length bed. You've got full curtains, and I think there's some nice wine. And I think it costs about, what is it, Tim, like $11,000 US?
Yeah, $10,000 or $11,000 for a round trip.
Round trip.
I think that's a one-way, actually.
Oh, 10,000 euros, excuse me.
A return flight to New York costs about 10,000 euro, and that's about 11,000 US. Compared with yeah.
But is this like in addition to the plane that has business class? Like, does this make business class cheaper? I'm just asking for a friend.
I think business class is not going to be as nice as this redesigned first class cabin.
Business class.
I mean, it's basically your own cabin here. There's a real bed that you can sleep in. It's pretty great. The executives who unveiled this, they talked about that they weren't seeing any sort of softness when it comes to the high end of spend, when it comes to the travel category. There's a quote in here. The CEO said, Paris is still the #1 destination people come to for many, many reasons. It's crazy what people are willing to spend.
Well, when the consumer is under pressure, you double down on the guy who can spend a lot of money.
100%.
I feel like I need to take on like 6 or 7 extra jobs to be able to afford that flight.
You do. This would be true.
So there's a story that caught my eye, which is about a Gen Xer who plans to earn $800,000 this year. Still probably not enough to be able to take that flight. By holding on to 6 remote jobs. How does he do that? He hires people to be him, basically. He'll like make the decision, he'll show up on the conference call, but otherwise he hires other people to do a lot of the work.
Wait, so is $800,000 like net or gross?
I think that's gross, and he netted $320,000 in profit from this whole like gig.
Couldn't you just get a job for $320,000?
So he takes on the job and then he hires people to do it. And so he's obviously going to pay them less.
He takes on several jobs, 6 jobs, and then he hires other people to do parts of those jobs. And that way he thinks it provides him job security, because if he gets let go from one of those companies, it's okay. He has 5 other jobs. So he's in good shape.
There's something very weird with this business model.
I would not want to be his accountant.
Yeah.
Sounds like
that's a good point.
Sounds like it could all come crashing down very, very
Well, yeah,
quickly.
but like with
What
like
if you're
4 of
required
those
to be on
companies
a
saying,
Zoom
"Come back to
call?
work, get into the
Yeah.
office," right?
Or like, what if they find out? Like, is that bad?
Yeah,
If
that would
you-
be bad.
Okay.
Yeah,
Is
that'd
he
be bad.
identified in the story?
No.
Wait, Harrison?
Yeah, that's a pseudonym.
Harrison.
Yeah.
I know a Harrison.
We see you.
I know some Harrisons out there.
I know. I think we all know a Harrison. Probably not him. All right, guys. That's a wrap. Tuesday's over.
Harrison Ford.
You know what? I actually think he's
It's a Gen Xer. It's a Gen Xer.
There you go.
Thank you. Good point.
All right, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals, we call it the closing bell. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. That is Carol Masser. I'm Tim Stenivek. Some news in the world of fixed income yesterday.
If you're watching on YouTube and we're pointing at each other, it's because we've got a Zoom and we're like trying to tell each other who to go.
Was that on air?
I don't know.
Did that happen? Did that go to air?
Our producer, Elizabeth's pretty good about like making sure we're not doing something that would embarrass ourselves, but every once in a while I wonder if like, because we're...
The secret's out, though. I mean, we do have a method to our madness. It is hard when you're 2,600 miles away from somebody to make sure you don't step on their toes and, like, you know, ask 2 questions in a row. So Carol and I have set up a little Zoom room where we can kind of point to each other and communicate. So
Elizabeth says she covered us.
Secret.
She covered us, as she always does. Okay. Anyway,
All right. Thanks,
I'm sorry
Elizabeth.
for interrupting.
Appreciate it.
Take it away.
That's okay. BMW is selling $4 billion of U.S. high-grade bonds as investment-grade firms seized on the relative market calm to raise fresh debt ahead of the Fed's decision. That comes tomorrow. We got Christian Hoffman with us. He's head of fixed income and a portfolio manager at Thornburg Investment Management. Christian, good to have you join us. Let's take a step back, big picture, and talk a little bit about fixed income. Our drive to the close guest earlier basically saying, hey, I'm going to stay away from fixed income right now. Rates are really where they're supposed to be. Are you surprised to hear that as somebody who focuses directly on fixed income? That was Scott Ladner, by the way, over at Horizon Investments.
Look, I don't think you need to load the boat on duration today. I agree with that, but I think there's a clear case for fixed income. You know, you're able to get 5 to 6% returns without taking a ton of risk, and you see some sell-side strategists forecasting kind of 0 to 3% stock market returns in the U.S. over the next decade. So that looks pretty interesting, you know, in comparison to those forecasts. I would also say that fixed income's ability to add ballast and income in your portfolio, you know, is notably different than we saw over the past 15 years when we were living, you know, in a zero interest rate world. So, you know, we've certainly moved from, you know, when we were close to 480 on the 10-year, but it doesn't mean the value proposition is gone or there's not a clear case for fixed income today, especially relative to the past.
So you're talking U.S. debt you would find, or is it corporates or some other part of the fixed income world? I mean, we talked about munis, I think it was last week, and that they've definitely been under pressure. But is it other parts of the fixed income world that you're finding better opportunities, or where are the best opportunities?
Yeah, so we have a global relative value framework here at Thornburg. So we find opportunities really in structured product and the corporate side, from high quality to low quality. I would say munis, to your point, have actually become more interesting in recent weeks. I think there's a couple reasons for that. You know, one is that at this time of year, you do see some seasonality where, you know, people are pulling money from that market to pay tax, you know, pay for tax needs. You also tend to see the flows there dominated by retail. And those sometimes do not, you know, track one for one versus core rates, which tend to have a more institutional driver for the flows there. So you've seen some of those ratios widen out, and it's actually, you know, it's a relatively more attractive entry point relative to even a few weeks ago. So it's really all the above to your question.
Christian, how do you think the economy is doing right now?
I think it's doing notably worse than a few weeks ago or a few months ago. And that's really driven by uncertainty. So we see just a tremendous amount of, you know, what I would call tape bombs in terms of tariff announcements, retractments, and that really makes people pause and pull back if they don't know, you know, what they should do or what the world is going to look like tomorrow. And that pause creates its own mechanism where that inaction leads to a slowdown. So I think that will continue. And, it kind of becomes a self-fulfilling prophecy where the inaction, again, makes people less willing to take risk. It makes them less willing to drive investment and really sit on the sidelines until they figure things out. That's in the real economy, but you also see it, from someone modeling out, right? It's hard enough to model out the future as it is, particularly if you don't know if the drivers are changing, on a minute-to-minute basis.
It's interesting to hear that because in one sense, we do get that and the uncertainty from companies, but then in another sense, we get, a $32 billion acquisition from Google, its biggest ever, buying this cybersecurity firm Wiz. That was in the deal, that was happening for 10 months as far as we know, but help me make sense of that, like a big deal like that, but also the uncertainty out there.
I mean, I think there are winners and losers, and I think that is a drop in the bucket, for Google. You've heard about a, K-shaped recovery, and, certainly, there are folks that have hard assets with, low coupon debt that's locked in. Those folks have a lot more ballast and are in a better position than, folks living from paycheck to paycheck and dealing with a softening job market, and a lot more uncertainty out there. So it's not that everyone is necessarily cautious. It kind of depends on your starting point, and also, again, I think the levers that you can pull to deal with this uncertainty. And Google, I would say, is in a very attractive position relative to all those points.
Christian, do you feel like, though, there's a growing bunch of data points, and we'll see what kind of data points we get from the Fed tomorrow, certainly with the dot plot and what it has to say in terms of growth for the U.S. economy, as well as expectations around Fed moves. Having said that, Torsten Slok over at Apollo is sharing with me some additional B of A research that's out there, and what they found is small business uncertainty is on the rise in the midst of increasing volatile market and policy conditions. In response, according to B of A aggregated credit and debit card data, small businesses are slowing their card spending across the board. It just feels like we keep getting data point after data point. Sentiment, as you said, can lead to actions where people rein things in and slow stuff down. But I mean, are you thinking more and more about the possibility of a recession, and is that shaping how you think investors should invest right now?
So I would say two things to that. One is that, 3 months ago, if you said you were betting on a recession, people would look at you like you're crazy. There's always some potential that you hit a bump in the road. And we haven't been betting on a recession, to be clear, but even more important than that, it's about looking what is priced into the market. And if you looked at high yield spreads flirting with the 260s and the S&P 500 trading around 22, 23 times, that didn't leave a lot of room for error, even in a very good world. And so when you do hit these bumps in the road and when the worldview becomes more muddled, you see valuations react very quickly. And, that's what we've seen, in the previous couple weeks. That volatility does, create some opportunities. That said, I wouldn't say that broadly, risk is screaming cheap today. But it's much easier to imagine what a potential slowdown might look like and feel like, just given some of those data points that you mentioned and where we are in the economic cycle.
And you, like most folks, since we don't really expect the Fed to do anything, are eager for the dot plot, the summary of also the summary of economic projections from the Fed. I mean, what are you going to be looking out for specifically?
Honestly, I'm not too excited about this Fed meeting. Some are more exciting than others. There's going to be a lot of tap dancing about, what does all this mean? And I think Powell, similar to his speech 2 weeks ago, is going to kind of say, hey, we're in wait and see mode. There's a tremendous amount of uncertainty, which we've been talking about. And, it's hard for us to make decisions given that we don't know what the actual drivers of, these policy changes might look like. The dot plots are likely to suggest probably slightly worse inflation and probably slightly worse growth as well. So they're going to trend slightly more stagflationary. But I think you're also going to see Chair Powell step back and say, hey, don't read, too much into this. There's a lot of uncertainty right now and we're trying to make sense of it, just like you are.
What's one question you'd ask Powell, just 30 seconds, if you had a chance tomorrow in the press conference?
My colleague Matt Burdett saw Powell at LaGuardia Airport 2 weeks ago, and he respected his privacy, which I absolutely would not have done. I think I would have accosted him. I would probably ask him, what he would really like to tell the president, off the record behind closed doors.
You sure you wouldn't have asked him what his favorite Dead song is? You sure you wouldn't have done that?
Good ask. Yeah, favorite concert, but that'll probably come out in a minute. So we can wait for that.
That's true, and you might more likely though have gotten an answer to that question than the other one. Christian, thanks so much. Be well. Christian Hoffman, head of fixed income over at Thornburg Investment Management, roughly $47 billion in assets under management. So, no doubt about watching what the Fed chair may say tomorrow at that press conference. All right, you're listening and watching Bloomberg Business Week. Carol Massar, Tim Stenovic. This is Bloomberg.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. Turned out to be a down Tuesday with the Dow, the S&P, NASDAQ all slumping. And this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. A down day for the Dow, the S&P, and NASDAQ. S&P finished 60 points lower, 56.14, drop today of 1.1%. The tech selling continued. NASDAQ down 304, down 1.7%. The NASDAQ 100 index, full of big tech names, also down 1.7%. The Dow down 260, down 0.6%. But again, to keep it all in context, S&P lower by 1.1%. 10-year 4.28%, the 2-year 4.03%. Gold up $34 the ounce, trading at a record $3,034, up 1.1%. And West Texas Intermediate crude down 1.1%, $66.83 a barrel. Shares of Tesla down 5.5% today. BYD shot to a record after unveiling an electric car that can be charged as quickly as a gasoline vehicle is refueled. Nvidia down today by 3.3%, close to the lows of the day. CEO Jensen Huang spoke to the Super Bowl, or at the Super Bowl of AI, that's Nvidia's description, addressing 25,000 people. He touched on a number of topics, including autonomous vehicles.
Time for autonomous vehicles has arrived, and we're looking forward to building with GM AI in all 3 areas. AI for manufacturing, so they can revolutionize the way they manufacture. AI for enterprise, so they can revolutionize the way they work, design cars and simulate cars, and then also AI for in the car.
Huang also laid out plans for more powerful chips and a model for robotics. Nvidia shares today down by 3.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, our next guest is a self-taught cook who you may know from Instagram, Shred Happens, where he has more than 4 million followers. It's there that he's documented his journey from being out of shape and unhealthy to losing over 100 pounds, which he attributes to cooking and eating healthy foods. Now he's got a food company and a cookbook. Arash Hashemi is a creator and the co-founder of Kaizen Food Company, which makes low-carb but high-protein rice and pasta. It's like I'm from New Jersey or something, which I am. Pasta. He's also the author of the new cookbook, Shred Happens. So easy, so good. He joins us here in the Bloomberg Interactive Brokers studio. A beautiful book. Did I say your food company correctly?
Kaizen, yeah.
Kaizen.
Yeah.
I had a feeling not. How are you?
I'm doing great. How are you?
I'm good. Everybody always has a journey, I feel like, to get to something.
Yeah.
This is your first cookbook, your first book. Tell us a little bit about the journey and how you did get to this.
Yeah, well, I mean, the story starts from a young age. My parents immigrated to this country, and I was always focused on success and chasing a better life and making them proud. And so for the majority of my life, I was really professionally driven. And I was doing really, really great in the corporate world. But in late 2017, I just kind of looked at my wife, Madalena. I'd always struggled with my weight. And at one point, I was over 330 pounds. I was pre-diabetic.
Wow.
I had high cholesterol, high triglycerides. And
If you're listening on radio, you don't look like somebody who was 300 pounds.
Oh, thank you.
But anyway, go ahead. Go ahead.
Yeah, and so I knew I needed to do something to kind of change things up. Otherwise, this was going to get too late. And so I looked at my wife, Madalena, at the time, and we decided that I was going to leave my corporate career. It wasn't an easy transition, but we made certain sacrifices. We adjusted our lifestyle, and I set out to kind of change the direction of my life and refocus my relationship with food.
How were you able to do it, Arash? As Carol mentioned, everybody has different stories.
Yeah.
But you did it through cooking yourself, through eating differently.
Yeah.
We talk a lot about GLP-1s on the program and the business opportunity there and the way people are using them. But how specifically were you able to do this?
Yeah, look, I think similar to many Americans, I was eating the wrong foods in the wrong quantities. And over time, that just kind of, I couldn't outrun that. I always had a gym membership. I had personal trainers. But, you can very quickly, eat the 500 calories that you're going to burn with an hour at the gym. And so for me, I really needed to focus on making foods that I was actually excited about eating. I had tried every single diet out there, from Weight Watchers, Jenny Craig, The Zone, Atkins, you name it, I've tried them all. And, I think they're great for people, depending on whatever their circumstances are. For me, they felt a little bit more restrictive. I wasn't really excited about what I was eating.
You don't want to count points?
Hey, that could be useful
I'm
for
not
some
judging.
people.
I'm not judging,
Yeah.
but
And I did for a while, and actually,
because
fun
it has
fact,
worked for some people, right?
Absolutely. And fun fact, I was on Weight Watchers for a number of years, and I always remember, there was a 4 p.m. Weekly weigh-ins. And so starting Tuesday, I was always trying to figure out, all right, how do I game the system so I can actually, show a loss for the week? And so, but look, I think for me, it was really, all those diets, while they didn't work in many respects, they did work in the sense that they helped me understand what I needed. And for me was, I love food, and I wanted it to be an adventure. I wanted to be mentally stimulated as I was eating. I really enjoy the process of food. And so, I had to figure out how to do that for myself.
Well, I think what's interesting, too, is your book is so much like Mediterranean food.
Yeah.
And was that because that's what kind of got you to a healthier place, a better weight, just a better kind of relationship and existence with food?
Yeah, I think the big thing for me was, I'm Persian, and so we use a lot of spices in our home cooking and in our culture, and so those played a huge part in adding flavor to the different types of meals that I was making for myself. We use a lot of fresh herbs that add just a burst of flavor in every bite. Whether that's fresh mint, dill, parsley, tarragon, and so I started kind of experimenting with those things. And the great thing is they also don't have a lot of calories, and so. I was adding a ton of those to my meals. I was using a lot of citrus, and I was able to get a lot of flavor out of those very simple changes. And that got me excited about eating. It was more calorically friendly, and, kind of started from there.
Did you have to be really precise about measuring out ingredients, counting calories, and really, or could you be more, could you be less formal about it? Could you be more relaxed about it?
I'm much more relaxed now, but at the beginning, I absolutely had to take inventory of what I was eating. And one of the first things that I did was actually, I started just documenting what I was eating just on a sheet of paper at the time, because I didn't really realize how many times throughout the day I was actually reaching for something. And for me, those little nibbles, those little bites, licks, the snacking really caught up to me. And that was really an opportunity in of itself for me. I was cutting out about 500 calories a day just by kind of monitoring that. Or if I knew that I had to actually, write something down, it gave me a second to kind of just pause and question, do I really want to be eating this right now? Is this the right choice? And that helped me be much more mindful, because before that, I was just eating without really any sort of, concern for the ramifications or the consequences.
How does physical activity play a part in your journey?
For me, it's played a role. I'd say the bigger thing for me has been changing the dynamic with food and eating foods that keep me satiated, keep me full, deliver a ton of protein with the right levels of fiber to kind of keep me going throughout the day. One of the bigger things that I set out to do at the beginning of my journey was, I didn't really know how to swim or run really a mile, but, I said, hey, I'm going to do a half Ironman and train for a triathlon. And so... that was an interesting process. And so I actually ran in 2 half marathons. I completed one, I ran in 2 half marathons, completed 2 half triathlons or half Ironmans, and then did a full marathon as well. But for me, the bigger opportunity was really around food, because, as they say, you really can't outrun a bad diet. And that's where I really struggled previously.
How did you think about, I think there are a ton of cookbooks out there, as you know, but how do you like the balance of creating something that's really tasty and appetizing and kind of attractive looking, and then but not making it so complicated that people are like, forget this, let me just order in. So how did you think about it when you put this book together?
Yeah, I think for me, the biggest thing again was through all the diets that I had done, they were either boring, and so I knew I didn't want to do the typical brown rice, boiled chicken, and broccoli, because that led to me kind of falling off, because I was always chasing excitement.
Yeah.
And so for me, the biggest thing was finding ways to incorporate flavor in simple ways to doing, to what I'm eating, in order to be able to kind of be excited about it, be mentally stimulated, and look forward to eating. And so, I achieved that through the spices, through the herbs. I also have a full chapter of sauces, because that's really what helps elevate really any dish. And so as long as you've got different flavors and textures going on and colors in your meal, because we also eat with our eyes. And so for me, the biggest thing was taking time to really plate things instead of just standing up, putting something together and eating at the kitchen counter. For me, actually taking the time to plate it up in a beautiful way really made a difference.
Arash, I just have to tell you, if Tim was here in studio, this is when he usually breaks out his sandwich, right?
Yeah.
Or it would have been right? It would have been probably the break beforehand, Tim.
Yeah, don't worry, I got my banana and my carrots right here. There we go, right here.
It's usually
That's for
though
later.
a
Hey,
full-on sandwich, but anyway.
Yeah, I would. Hey, I do want to ask you, I'm getting an urgent email from a colleague, Emily Griffeo. She anchored with me yesterday when Carol was out. I'm so jealous I missed Shred Happens by one day. OMG, I like his content a lot. I've made his recipes.
Oh, that's amazing.
It raises the question, though, about this. It's not a side hustle for you anymore. This is what you're doing now.
Yeah, I was in corporate finance and accounting.
So you said you scaled back on your lifestyle back in 2017 as a result of your health.
Yeah.
You made some adjustments to your lifestyle. Have you been able to offset and more the salary you earned in the corporate world by doing what you're doing now?
Yeah, I have. And I think, look, in the corporate world, obviously it's a salary. You don't have overhead. You don't have expenses. You're not investing for the future. So, it took me a while when I initially set out. I was begging companies to send me, a free jar of peanut butter. And many of them wouldn't. It took me almost 2-3 years to monetize on the content that I was making. And I was in corporate finance before at a pretty large company, GE at the time. And so, when I left, it was a sizable gap in our income. We put our house on the market. I started renting my car out on Turo, an app. I started selling and flipping things on eBay. So I was trying to figure out how to make it work. For me, at the beginning, it wasn't really about making money. It was really about changing my life. And a few years in, I was able to completely offset the income that I was making with my corporate job. Now, I did create a high-protein, low-carb pasta and rice company, Kaizen.
Yeah.
And so to develop that, that required a lot of capital. And so at some point, I did have to go back to the corporate world to kind of fund the R&D of that. But yeah, it was tough. But now I've been able to completely offset it.
Just got about 30 seconds. So what's your focus? To build out Kaizen, or what's your next step?
Yeah, I think, continue to share content. Nothing makes me prouder than seeing families around the world enjoy my meals and make my recipes. And with Kaizen, we're able to deliver people a high-protein, low-carb pasta. So we're going to continue on that trend and hopefully allow people to eat a healthier version of their favorite meal without the calories, without the carbs, with much more protein.
I'm starving. If you were cooking for Tim and me, what would you cook tonight?
The Middle Eastern chicken and rice bowl, no question.
All right, deal. Would we get dessert too?
Absolutely.
I see you've got
there's
desserts.
a whipped Greek yogurt and berries. It's delicious.
Oh my God, I'm starving. Good luck. Stay in touch.
Thank you so much.
Love to hear how things are going.
Thanks, Carol.
Arash Hashemi, creator and co-founder of Kaizen Food Company, and of course his new book, Shred Happens, so easy, so good. 100+ protein-packed Mediterranean favorites with a low-carb twist. Good luck. All right, you're listening and watching Bloomberg Business Week. This is Bloomberg.
4:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story headline right now on the Bloomberg Professional Service. JPMorgan Chase boosting its quarterly dividend to $1.40 a share. Estimates had been for $1.25, but right now JPMorgan Chase boosting that quarterly dividend to $1.40 a share. And this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, the offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Tech jitters resumed on Wall Street today. Another day of losses. Tech particularly hard hit with the Dow, the S&P, NASDAQ all declining. S&P 500 index today did move lower, down by just about 1.1%. We had the S&P falling by 60 points. The Dow was down 260. On the Dow, a decline of 0.6%. NASDAQ was down 304 points today. For the NASDAQ Composite Index, that was a drop of 1.7%. Again, to be clear, the Dow down 260, down 0.6. S&P, to keep it all in context, down 1.1%. 10-year, 4.28%. The 2-year, 4.03%. Spot gold was up $33 the ounce, up 1.1%, $3,034. West Texas Intermediate crude down 1.3%, $66.73 a barrel. And Bitcoin down 2.4%, $81,909 on Bitcoin. As for the market outlook, Scott Ladner is Chief Investment Officer at Horizon Investments, and he was a guest right here on Bloomberg Business Week.
This is a time when we're going to see some pretty good buying opportunities for U.S. stocks. I mean, we're getting some of these things that had a bigger deal than we would have otherwise had because folks are rotating out of U.S. and into these other markets. We think that's probably more of a trade, but maybe a trade that's going to go on for a quarter or two, not for a year or two.
Scott Ladner of Horizon interviewed on Bloomberg Business Week. So a down day for stocks. Tech particularly hard hit NVIDIA. Even with Jensen Huang's speech today, NVIDIA was down by 3.4%. Recapping stocks lower, S&P down 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, shortly, 2 NASA astronauts who've been stuck in orbit for 9 months are finally headed home in a SpaceX craft. It caps a saga that's captured international attention and marked a setback for Boeing's space business. With where they are, with where we are, and with us is Bloomberg News Business of Space reporter Bruce Einhorn. He joins us at Bloomberg Intelligence headquarters in Princeton, New Jersey. Bruce, what happens just before 6 p.m.? Lay it out for us.
So the SpaceX capsule is supposed to splash down off the coast of Florida. It has the 2 astronauts who've been up there for so long, Butch Wilmore and Sonny Williams. There are also 2 other one other NASA astronaut and a Russian cosmonaut. So altogether, 4 passengers who will be splashing down off the coast of Florida sometime around 6. If all goes well, there will be 2 SpaceX boats, recovery boats, that will circle the craft. The crew will emerge from that, go onto the boats. They'll go to hospital for just routine checkups. If all is well, then the NASA crew will fly off to Houston to be reunited with family. Sonny and Butch, of course, have been up there for quite a long time. They originally were expecting to be there for about a week, and it's been about 9 months. So a lot of family members very eager to see them.
And I would guess that they're pretty eager to. I think I saw somewhere Sonny gave an interview, maybe it was with somebody with the Times, and just said something about, I want to go to a beach, and then I want to just kind of be like on the ground. What they all said too is, not like there were major problems or anything like that. They prepare for these things, that things don't always go well, but I think it's safe to say that they never maybe anticipated being up there for so long. I mean, it's been quite a journey.
Yes, they will have. They haven't set the record for the. They're not close to that.
Yeah.
In terms of NASA astronauts, the longest single stay, but they're up there. This will put them at the 6th spot in terms of the longest stay by NASA astronaut for one trip in space. I think you're right that I don't think that they expected this was going to happen, but on the other hand, they probably knew in the back of their minds that there was a possibility that if things didn't work out with the Boeing spacecraft, the Starliner, that the scenario that was most likely was this, that there wasn't going to be any sort of special rescue mission that was going to go up and get them. That would be very pricey, and there wouldn't be any particular need for it if there was no urgency, if there was no emergency, in which case then the plan would have been what just happened, that they'd stay and they'd work in the space station, be part of the regular crew, and wait for a chance to get on a SpaceX capsule to get back, and those don't fly that often.
Bruce, I'm looking at the FA function on the Bloomberg terminal for Boeing right now. Defense, space, and security as a segment brought in about $24 billion of Boeing's $66.5 billion in revenue in 2024. Unclear to me exactly how much of that is related to this specific program, but is this the end of Boeing's space program?
I think it's premature to say it's the end of Boeing's space program. We do know that Boeing is looking at things that they consider to be non-core, and the number that you just gave, I think primarily that's defense. That's probably space probably accounts for a relatively small amount of that. I don't have the exact numbers.
Well,
but space is small for Boeing. It's not their main business, and so I think that people are thinking long and hard at the company about just what is the future of this.
Yeah, and I feel like on the flip side, right, there's Boeing and trying to figure out what their role in space will be going forward. On the flip side, you just see how increasingly dependent it seems like NASA and even the federal government is on SpaceX, right, in terms of Elon Musk and his company when it comes to space travel or, basically, I don't want to say rescue because I don't think that's a fair word, but going up and bringing these, astronauts back to Earth.
SpaceX is the only game in town right now for the Americans. One of the reasons that this Boeing Starliner was so important to NASA is because they wanted to have a fallback option in case there were any problems with SpaceX. They wanted to have another American company that could take them to and from space. Without Boeing in the picture, at least for now, there's SpaceX, and if not SpaceX, then there's the Russians. There are still, because Russia is a partner in the International Space Station, there are still U.S. astronauts who do ride up to the ISS on Soyuz rockets, just as there's a Russian cosmonaut who's coming down today in this SpaceX capsule. But Soyuz rockets are small. They're not ideal for a whole lot of reasons, not the least of which is they're not American. NASA would like to have another American option. As it is, they have SpaceX for taking people to the space station. There are other options for taking cargo, but for the foreseeable future, it'll be SpaceX.
What about a company such as Rocket Lab? We've spoken to Peter Beck in the past. It's a company based in New Zealand, but they have the Rocket Lab USA branch here. Are they close to doing what SpaceX does?
I mean, technically, Rocket Lab is an American company. They have their origins in New Zealand, but they're now they identify as American. That's where their corporate headquarters is in California. So they do have some business that they get with NASA. They're not in the game of taking things to and from the space station. Keep in mind, the ISS is only in business for a few more years. This is a space station that's been around for a long time, but it's nearing retirement. It's supposed to only be active until the end of the decade. So it's not really that lucrative of a business if you're a newcomer to this to think, all right, I want to get a piece of that, because the ISS isn't around that much longer. Rocket Lab does have a bigger rocket that they're working on, the Neutron rocket, which would be more of a direct competitor with SpaceX. Currently, they have the Electron, which is a smaller rocket, which is not really apples to apples.
All right, so 6 p.m., I think, local time, Florida, we expect the splashdown. So we're going to be obviously looking out for that. Hey, Bruce, thank you so much. Glad we could check in with you on that. Bloomberg News space business reporter Bruce Einhorn at our Bloomberg Intelligence headquarters out there in Princeton, New Jersey. Carol Massar, Tim Stedovic. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
Time to take a look at some of the stocks on the move today. With us is Bloomberg News cross-asset reporter Denitsa Sukova. She joins us in studio. Tim out there on the West Coast. We talked a lot about NVIDIA today.
Yeah, I feel the biggest takeaway is Jensen Huang failed to excite investors today. The stock is down 3% today. And if we look at the year-to-date losses, we're talking about 14% loss, which kind of seemed impossible a few days ago. That said, the conference was full of impressive announcements. We heard about powerful chips, model for robotics, personal AI supercomputers that's going to let developers work on desktop machines. We heard about all those partnerships with General Motors, T-Mobile, Cisco. So really promising announcements for pretty much everyone. And we know that was kind of a little known event that everyone was so excited about.
Wait, it's the Super Bowl of AI. Tim,
exactly.
Is it little known, Tim?
No, I mean, well, you know what's funny? They talked about how in recent years it's become like this event that only attracted when it started, or not when it started, but a few years ago, it only attracted like a few thousand people. Yeah, I think it's fair to say. And now, like, thousands and thousands of people are going because Jensen has achieved this iconic status. So, all I'll say is stay tuned for what happens later in the week because, as we've talked about, the stock in the past couple of years has moved significantly throughout the week of the event. But Denitsa, I'm sorry, you were saying.
Can I just perspective up almost, it's still up 820% since the end of 2022, right?
Impressive rally. However you slice it, it's just very impressive. But that big hype we've seen before, maybe it's just like, obviously it's a very expensive stock right now, but that big hype and chase in upside options is no longer there. So maybe people are taking a breather. Maybe it's going to go on.
It's like the reality check around AI, right? Trying to figure out, I mean, Jensen's always enthusiastic. The hyperscalers still seem to be spending, but you just kind of wonder, is there something around the corner? So, yeah, he was kind of interesting. All right, so NVIDIA. Tim, do you wear Warby Parker?
Yeah, I have in the past. These are not Warby Parkers right now.
Okay.
The challenge that I ran into when I was a Warby Parker customer is that everybody had the same glasses that I had. So
true.
I had to go to a smaller shop. But Warby Parker stock moved today, Denitsa. What's going on with Warby Parker?
Yes, they're having a very difficult way. They, perhaps because you moved to other brands, but they tumbled 12% today. And what we're seeing is a big drop in web traffic, 17% down in March, 4% down in February. But I think here there are two important themes that we've talked about a lot. So Warby Parker was one of the companies that was warning against anti-American consumer sentiment fueled by Trump. And this is, we're seeing here, we are traffic falling. And then the other important theme is consumer confidence and consumer weakness. Warby Parker was the worst performing stock in the S&P Retail Select. And also the overall gauge has been under a lot of pressure. So we're seeing two forces affecting Warby Parker at the same time. So I think it's an interesting industry story. And the stock is down 26% year to date.
Where are their glasses made? Because
I think they're made in China.
Right?
I think.
I don't know.
I think they are.
I'm just looking. I mean, it looks like all of their revenues are in the United States.
But the glasses are made outside of the U.S., but their business is done in the U.S.
Yeah. So are they feeling tariffs or not yet?
Not yet, but they're worried about that anti-American sentiment and people just avoiding a brand just because it's American brand. And they're like very New York focused American.
Yeah. 10% of the float is short too. So there's some negative sentiment there. That's an interesting one. Wow. Hey, we talked about this big deal that Alphabet did. So that's certainly one that you're keeping an eye on or did keep an eye on today.
Yeah, for sure. And we're seeing another Magnificent Seven company that's potentially seeing some good news, and we're seeing, again, negative reaction. Going back to the deal, Alphabet agreed to acquire cybersecurity firm Wiz for $32 billion in cash. So obviously there was a lot of volatility with that deal. There was a lot of back and forth. Initiation fell apart. There was a bid about a year ago, which was $23 billion. So the price tag now is much higher. There are some uncertainties, obviously antitrust, even though people are saying that with the Trump administration, that is less of an issue. But that says people are very worried about Magnificent Seven and like those high valuations, people are more sensitive. We actually saw Meta fall into negative territory, and now all Magnificent Seven stocks are down on the year, which is kind of crazy. Of course, if we zoom out, incredible gains. But this year, it's been such a choppy and difficult start.
Yeah, I mean, it's remarkable. The size of this acquisition for a company that's only 5 years old, I mean, it's pretty incredible to see this growth, especially when they offered Carol 23